Good morning, everybody. Welcome back to another episode of the Market Open. It is Monday, August 26th, 8:46 a.m. We are here 1 minute late, but we are still live, and it is time to get into the Market Open. It is Monday morning, folks. Another week, another chance to get after it. It is the last week of August in terms of trading. So going to be really exciting to see what ends up happening in the month of August. Usually August is green during an election year. It ends up being red in every year, or mostly every year outside of the election year. So we have basically 5 days left to end green. I think we will end green given where the month started after the August 5th collapse. But we'll see what happens over the next 5 days. This is going to be a very, very important week for a variety of reasons. The number one reason, obviously, is Nvda. That will be reporting on Wednesday. I have no idea what to expect from Nvda, but I'm very excited. I think Nvda is going to crush it. I think the market's going to interpret that as good news for the overall macro kind of AI thematic that's been going on. But there are a bunch of caveats to that, and we'll be talking about that and discussing it further throughout the show today and keep going from there. On top of that, we've also got the first week this week as a sort of reckoning for the market in terms of dealing with the fact that Jay Powell at Jackson Hole officially said we are cutting rates. Now, when I say officially, he didn't literally say it, but there is no way to slice it any other way. We are getting a rate cut in September. So now it's not just priced in my opinion. It's priced into the point where it's an inevitability. And the question becomes, what is the rate cutting cycle going to look like over the next couple of months and next couple of years? And how aggressive is the Fed going to be with cutting rates, particularly because the labor market, which is what Jay Powell, Goolsbee, and a lot of these Fed officials have been talking about over the past couple of weeks, is starting to cool off. And so I've done a decent amount of research over the weekend trying to understand the implications between the federal funds rate, unemployment, and ultimately the S&P, how the market reacts. And so there's a lot of data to go through, but I think we are heading into a 2019 scenario where the Fed is going to lower rates. Unemployment hopefully is going to come down, even though we're in an uptrend. And that will mean the market does well. But we're going to have to see how that plays out. We're going to get August jobs data in a couple of weeks, or I think early in September we get that data. CPI, inflation, all that stuff is irrelevant to me in my opinion now. Now it's simply about the unemployment and labor market. And we're going to go deeper and deeper and deeper over the next couple of days to figure out if unemployment actually is going to be an issue. Because if it's not, then I think the rate cuts will be bullish. If it is an issue, then rate cuts are not going to be bullish because then we're heading into a recession. So lots of stuff to go through, lots of stuff to discuss. And we are here. We're live. Thank you all for being here. Brad, what's up? Jody, Neville, Bay Ray, Deacon, Sundown Sam, Rodolfo, Cool Comic Guy, Tony, Lena, William, Martin, Andre, Swaggy. Thank you everybody for being here today. Mohammed, June, Z, Jarrett, Andre, Greg, who says, wake the fuck up. I'm 1 minute late, dude. And it's horrible. Gene, Stefan, Iceman, JJ, Blake, GE. Thank you all for being here. Sanjay says, sorry guys, I had to finish up a tweet. That should be my excuse every single time. That should be my excuse every single time. What did you guys do over the weekend? Hopefully you guys had a good weekend. I really relaxed this weekend. I did some work in regards to, if you call research work, then I did some work with research. But besides that, nothing too crazy. Oh, I did get my computer set up here. So I usually have a monitor here that I haven't had because the monitor broke a couple months ago. And I finally ordered a monitor from Amazon. Dude, it came in like less than 24 hours. It's just every time Amazon. It blows my mind. And so I finally set that up. So I have two screens, the iPad and the monitor here. That is going to help me get through a lot of the data that I'm looking at. And so that hopefully should make us a little bit more efficient every morning as well. I'm beneficial. What's up? P-Nick, Gene. What's up? Bay Ray, Jeremy. Thank you all for being here today. All right. So I think let's get into it. I went to a wedding yesterday and I got schmacked. Okay, great. That's amazing. I did not watch a movie for all of those that were asking if I watched the movie. I thought I was going to watch a movie and then I tried to watch Back to the Future 3. And within the first 2 minutes, I got bored. So I was like, all right, I'm done with this. So there was no movie watching for me over the weekend. Let's start with the Fed. I want to play a small clip that you guys probably missed from Goolsbee talking after the Jackson Hole speech. Let's take a listen to what he said, because when it comes to the rate cut and when it comes to the labor market, I think you have the Fed presidents that are basically getting to the point where they are signaling the labor market is all they care about. And this speech is going to kind of get us into the main concerns I have now about the broader market and what we need to look to as people who are analyzing the macro.
You're one of the originators of this idea of what I guess people call passive tightening. Can you explain that to people, why that matters and how that's happened, that you've gotten tighter?
The basic idea is what matters for the economic decision making of if you're going to build a factory, if you're going to buy a durable good, what have you, is the interest rate you pay minus the inflation rate. So if inflation is growing faster than the interest rate,
right,
in real terms, your debt service cost is going down, if you want to think of it that way. So that real interest rate is a measure of what's the actual tightness. And so if you set the rate at some level and then inflation just keeps going down and down, every time inflation comes in less than what you expected, you're tightening.
right.
And that means right now we're the tightest we've been over this whole rate
Even though
tightening
you
cycle.
stop.
Listen to what Goolsby just said. Basically, he's saying we're the tightest we've been, and as inflation goes down, but rates stay high, because we haven't cut rates in like 12 months, you get tighter and tighter. And as a result, that leads to ramifications, aka the labor market starting to weaken. So Goolsby right there is being as obvious as you could ever be about why we probably need to cut rates, solidifying the point that a rate cut is likely coming soon.
Stopped hiking rates
Even
in
though we
July
stopped in
2023.
July,
You've been putting more and more pressure on the
more and
economy.
more as the inflation has come down. And the thing is, we set the rate more than a year ago, and the conditions were really completely different. And you saw Chair Powell talking about that. He just kind of walked you through the history in a very clear way of how different conditions were 14 months ago.
Right.
And so I still think, not just for this meeting, over the next calendar year, let's say, I think it's worth looking at the statement of economic projections that the committee has been putting out every 3 months. In those statements, there's widespread agreement that there will be multiple rate cuts over calendar years 24 and 25. Inflation would be coming down and the unemployment rate would be creeping up a bit and settling in. And it's worth noting that that's under conditions where the inflation rate was coming down slower than it's been coming down in the last several months. And the unemployment rate is already a bit higher than it was.
So basically right there, he's saying, look, over the past couple of months, everyone's been projecting a certain amount of rate cuts from 2024 to 2026 based on the idea that inflation would be coming down slowly and unemployment would be creeping up slowly. The opposite has happened on both of those metrics. Inflation is coming down aggressively and unemployment is going up a little bit more aggressively than we would want to see, going from 3.4 to 4.3, going from 4.1 to 4.3 over the past 2 months. But inflation, again, coming below 3%. So the basic argument that Goolsby is getting at, and the reason it's so important to understand this is not just like confirmation bias around a rate cut, but rather what I've been focusing on the whole weekend, which is the rate cut actually bullish or not? Because now we're getting it. It's kind of like, it's like Christmas morning. It's like you've been hoping for this gift. You get the gift and then you open it. Like, do you even really want that gift? So the question is, do you want the rate cut? My opinion, based on what I'm listening to what the Fed president say, is that yes, you want the rate cut because there's something that's going up that you don't want to go up as dramatically as it's going up, which is unemployment. And so we need to, I think all of us need to shift the focus from inflation, which probably is not going to reaccelerate. If it does, that's another wild card we have to deal with, but I don't think it's going to be accelerating, to unemployment. Because if unemployment goes up dramatically, no amount of rate cuts within the next 6 months of protecting this 2024 rally is going to stop us from entering into a bad economic situation. Now, everything I'm looking at says that we're not going to have dramatic unemployment, but I think that's the one thing we have to care about. Just like we thought 5 months ago, inflation would aggressively come down, and it did come down. I think now the shift in the focus has to be on unemployment. Here's a chart from 2019. This is what happened with the S&P 500 coming from the December 2018 Christmas Eve crash. Unemployment went down from 4% to 3.5, so about 50 basis points. The S&P 500 went up from about 260 to 280 over the course of the year, from the bottom at 230. And the periods in red are when the Fed cut rates. and we saw the market go higher as unemployment came down. The only difference between now and 2019 is that unemployment is going up. It's not coming on the way down. The Goldilocks scenario is, and I think this is going to be the first week where the markets really begin to price this in, because now we have the inevitability of the rate cut completely priced in. Does the market feel unemployment will come down when the Fed cuts? Does the market feel unemployment will stabilize and we're losing 200,000 jobs a week? Will that be, going down to 150 or 175 or 190? Is there some type of rate of growth decline in the loss of jobs versus uptick that could happen via a rate cut, via 75 bips? And if that does happen, we're going to have a soft landing and everything's going to be phenomenal. If that doesn't happen, if unemployment creeps up from 4.3 to 4.5 to 4.7, I just think it's going to get harder for companies to show earnings growth, obviously because people are unemployed, and for the AI thematic to even have any impact, because it doesn't matter if the broader economy isn't okay. All the data I'm seeing shows that unemployment is really not at the level we should be worrying about at all. So I think like meet Kevin's bear case essentially is that unemployment is creeping up and that's going to cause a recession. I disagree with that. I fundamentally disagree with that, but I do think it's something we have to look at, because if we don't look at that, then you're going to ignore consumer health, you're going to ignore companies' earnings growth, all of that good stuff at the end of the day. Our boy Tom Lee had some things to say about Meet Kevin as well. So he unblocked Kevin over the weekend just to say that he doesn't that he doesn't like him. So your boy Kevin definitely pissed off Tom Lee. So on July 25th, Meet Kevin said, "Where the F was Tom Lee's buy order at close?" This is when the market was starting to fall. Meet Kevin 1 month later, literally 1 month later, says, how's this going for real, Meet Kevin? I don't know if the Bulls have definitely won yet. So Tom Lee taking a little bit of a victory lap here. Maybe a little premature right now. Maybe he's definitely correct. And, the Bears have officially lost. I still think we have to get through Nvda earnings and probably the election to officially say the Bulls have won, and being a Bear in 2024 was definitively the wrong strategy. So I think we still have a couple months of volatility to see how this plays out. But given everything that happened last week with CPI, with PPI, with retail sales data, with the jobless claims, with the overall non-farm payrolls, with the BLS revision, and then obviously with Nvda earnings coming up, that I think is going to top out and put a bow on the gift we've been given, which is a relatively strong economy, along with Jackson Hole and the confirmation of a rate cut. I think that's a lot of bullish sentiment going into the broader half of the year, which I think is going to be good for people that own equities, and hopefully that ends up turning out to be more exciting. Jed says that's the new metric: employment data and no more inflation. 100,000%. I think the market doesn't give a shit about inflation anymore. CPI could stay stagnant at 2.8 or 2.9. I think we'll probably come down to 2.8-ish on the next read. We do have one thing that's messing up inflation that we're going to talk about in a second that literally happened overnight. But besides that, it's unemployment, dude. That's it. It's unemployment. You cannot have, I did a lot of research around what takes a recession to occur. And essentially, if you get 5% unemployment, it's inevitable you're going to have a recession. Now, it might be a rolling recession where, it's not like catastrophic like 2008 or 2020 or anything, but there will be a recession. Like you just can't have that many people unemployed. There's obviously factors around illegal immigration, and if there's a higher denominator to the people that are unemployed, or the overall job pool, like what does that mean for the broader economy? So there's like a lot of nuances to it, but at its core, you get to 5%, you're going to get some level of recession because consumer spend is just going to have to come down. And again, Target, Walmart, Lowe's, they said the consumer's fine. Uber and Lyft said the consumer's fine, but then Starbucks, Nike, and McDonald's said the consumer's not fine. And so I still think the jury's out on the consumer. I think this week we'll get a lot more information with Dollar General and with Ulta Beauty and Gap and a couple other retailers reporting, like Kohl's. So we'll get a little bit more information around the state of the consumer. But in general, if we have more unemployment, it's going to be hard for companies to put up these numbers. If we have stagnant unemployment at this 4.3 to 4.5%, I think the market's going to rip, because the rate cut is going to be super, super bullish. And that's obviously going to help the broader, equity landscape that we have. Captain says, what about the market being extremely overvalued on top of everything going on? Does the bull case just bypass that? So you have to ask yourself a question. If you think the market's overvalued do you think the S&P can put up $264 of earnings by fiscal year 2025? Because that's what the market is pricing in right now in terms of growth. And that comes down to believing, the earnings growth potential of America, essentially, right? Do you think that Nvda, which is down a little, well, it's flat in the pre-markets, it was up a little bit. We'll talk about why the market just went red in the pre-markets. Do you think Nvda? Do you think Tesla? Do you think Palantir? Do you think, Amazon, Google, et cetera, they can put up the earnings growth to lead to $264 per share for the S&P 500, which is basically what the market's pricing in right now when you put in like a 22, 23 multiple. I think they can. I think there's going to be a lot of momentum and growth for them. So that's why I don't think the market's necessarily overvalued. Is the market a little expensive? Sure. But in a rate cutting cycle where your yield is going to decrease on all the assets or all the risk-free assets like money market funds or even high yield saving accounts that are just not going to give that much yield, you got to ask yourself, where is the best place to put your money? I mean, you could put it in gold. Gold is up like 30% this year. It's making a new all-time high today, but rate cuts again are even bullish for gold. And so it helps the borrowing cost of gold as well. So in general, I don't think the market's necessarily overvalued because I think the earnings growth is supporting it. But I also think the market has gone through volatility. Remember, August 5th, we saw a 10% correction. There were tech names that were down 30%. They took a beating. And so the reason they got bought up, the reason Meta's back to basically all-time highs after going to basically $440 a share from $540 and falling $100 is because the market realized, wait a second, Meta's growing at 20% a year. Wait a second, Meta is like at the precipice of where we think AI monetization in advertising is going to come from. Wait a second, it's an election year. There's going to be a lot of money spent on Meta. Like there's so many catalysts at the end of the day for these tech companies, all of them individually. Tesla has the weakest case, but they also have the most bullish case. The weakest case is FSD because it's not really making any money, but it's the most bullish case because it has probably the most potential out of all these companies. And still, you end up getting a bid on a company like Tesla that hasn't put up the best numbers. So at the end of the day, I think the market is not overvalued because companies will grow. And as long as the macro holds up, those companies will put in the right growth to justify the current multiple we have on the S&P 500. So that's what we're looking at right now. Now, what is one thing that's bad in the market? Well, it's always something that happens, and today it is oil prices. Oil is up. This could create some more pressure on inflation going into the next CPI report. Unfortunately, now, even if oil stays at this level for the next 5 days, that would end out the month of August. Oil was basically at like 73 for the majority of August, so I don't think it'll have that much of an impact. But three things that are happening right here. Israel launched a preemptive strike involving 100 warplanes on Hezbollah in Lebanon. We're going to talk about why they did that and how potentially a company that we all know is involved in that. Number two, Libya's eastern government said on Monday they're stopping all oil production. I don't really know why, but they said that this morning. I'm sure there's some geopolitical reason, but that was one of the headlines. And then finally, Russia launched a major missile and drone attack across Ukraine. All the energy stocks, Chevron, Phillips 66, Occidental, ExxonMobil, XLE, which is the energy ETF that people can look at. It's kind of the core energy ETF, ticker symbol XLE. All of those tickers are up this morning because oil is up. Now, oil, basically at $80 a barrel, it still is lower than where it was 5-6 months ago, which is nice to see. But that could be, putting pressure on the broader 10-year, as we see the 10-year yield has gone up today a little bit, and on inflation. Now, does the market care that much? Not really. Does Bitcoin care? Kind of. Bitcoin did a good job staying at 64,000 this entire weekend. Right now, it's tanking a little bit right here at 63,576, but I thought it would go back down to 58 over the weekend, and that 6% pop on Friday was just a fluke. Well, it seems like it's doing okay at 63,606. It didn't really react after the Israel-Hezbollah news came out, so the geopolitical stuff didn't really hurt Bitcoin, but I think oil prices going up this morning probably weighing a little bit on Bitcoin right now and some of these other risk assets. S&P 500 as well was at 563.18. Now it's at 563.02. So it's up right now in the pre-markets. We are green. I would not be surprised if we turn red for two reasons. Number one, last week was incredible. Last 2 weeks were incredible. Basically at all-time highs. We're $2 away from 565 on the S&P. So you would imagine people take some profits before we get to all-time highs. Breaking that all-time high level would be very bullish. I think that would be hopefully creating a new level of momentum on the broader indice, and that would hopefully get the NASDAQ to catch up as well. NASDAQ's top was 500. Right now it's at 480, so a little bit further away from its all-time high, but the S&P getting close. And that would be hopefully getting into a September where it's probably going to be volatile, and if we see some downside in September, maybe it doesn't crater the market if we're already starting from a level that's pretty high. But I think that oil volatility is something we have to look at. I don't think it's going to be the biggest deal in the world. I think unemployment matters more, but oil is hurting the market a little bit right now, and we'll see how the broader market interprets it over the next couple of days. Hopefully it is short-lived. And hopefully oil does not continue rallying as much. But I think this week it's probably going to stay in the 80s because there's not that much downside momentum coming given the geopolitical events that happened literally in the past 24 hours. So again, the major energy stocks, they are up. XLE, that's up about 1%. You got ExxonMobil up about 1.16, Chevron, all those good companies. If you're in oil, you are up today in a lot of those stocks. Palantir down 1.32%. So let's talk a little bit about Palantir. A couple things on Palantir that I want to bring your attention to. Number one, first about that Israel Hezbollah attack. Shout out to Doug for sending this to me. So this is really interesting. Israel knew somehow that Hezbollah was planning to launch 6,000 rockets and drones at Israel at 5 a.m. today. 100 plus Israeli fighter jets struck the launchers at 4:45 a.m. You got to ask yourself, how did Israel know that as Hezbollah was planning to launch those 6,000 rockets if this intel is correct? And why did they do this preemptive strike? I would imagine something like a company that rhymes with Palantir gave them a little bit of intel if Palantir is really that integrated into Israel's IDF, and probably told them that, hey, this was happening. So if this was really, I don't have any confirmation of this, but if this was because of Palantir and they had that intel to be able to tell, which is the whole point of Gotham, right? To do predictive simulations of different hypothetical events that could play out and then give you a course of action, and then AI just supercharges that course of action, that would be one of the biggest use cases. And that probably saved a ton of lives, which is very, very important from Palantir's perspective. So I think that could be one of the reasons why Israel was able to launch that preemptive attack. So that was one thing this morning that I thought was interesting. In terms of why Palantir is down, I said this last night on the Sunday show, and I'm going to repeat myself here. The stock is up 90% year to date. As much as I want this thing to go higher, I can understand why, if the market's getting a little bit risk off because they're afraid for a variety of reasons that they're afraid, maybe it's irrational fear, but nonetheless it is fear, that Palantir would be one of the first companies they sell off. Why? Because the stock is up 90% year to date. Like, it's so I think if you're a Palantir shareholder, this is the time to not get greedy. This is the time to not be like, well, why isn't it at 35 yet? Because honestly, it's complaining a little bit too much about a stock that has done very well. So the reason it's down, valuation is up there for Palantir. I think that markets, if they want to take profits, the first thing they're going to sell are your biggest winners. And if you have a stock that you're up double or triple on and you want to trim, raise some cash, maybe you're a little bit afraid of election volatility, maybe you're afraid of oil prices going up, and that might create some macro uncertainties. In general, in September, a lot of hedge fund managers and institutional investors are coming off from vacation. That's why August volatility tends to be a little bit lower in terms of the volume, and they start coming back in. They may not have looked at their portfolio for the past couple of weeks. They were vacationing. Last time they left, Palantir was at $22, $23. Now it's at $31. They might take some profits, right? So I think if Palantir can hold 30, that's incredible. I'm expecting it to test 27 again, because I just think in general, 27 to 32 would be a really strong range to consolidate in. But I wouldn't take that as a sign of weakness. I would take that as a sign of the stock's up. And it's going to go up and down. And over the long term, it'll probably keep going up as they keep executing. But nothing in their execution warrants them going back to 27 outside of valuation, which is fair because people just want to take profits. I think that actually creates a really good dip opportunity. I think Palantir is going to accelerate earnings growth from 27% revenue growth to 30% in Q3. And that 30% top line number is going to be very bullish, especially if the broader market is in a good spot, meaning that interest rates were interpreted as bullish, unemployment is not going up, and Nvda crushes earnings, which we'll talk about in a second. If all three of those things happen by November, when Palantir reports their next set of numbers, I think that's a great buy the dip opportunity if we go back to 26 or 27 or even 25. But I just don't think there's anything to complain about if it gets there, because none of us really expected it to get to 32. And maybe this is a dip in the pre-market and it reverses when the market opens and you start seeing buy-side momentum. But if it goes to 35 or 25, it would not surprise me. I just think 25 is a better dip opportunity. At 35, you just sit back and enjoy the gains as it continues to go higher. So that's what we have in the context of Palantir. One other thing I want to show for Palantir, someone made this morning. I thought this was really interesting. They made a Palantir ETF on how companies have done that have been publicly using Palantir. So since the beginning of 2023, shout out to Sella093 that posted this on Twitter. Palantir powered companies have outperformed their industry by averages of 50%. So Palantir power companies are 33%, industry average are 20.39%. So this is the Palantir ETF. If we look at how commercial customers of Palantir have done, they've done pretty well. Palantir investors have been excited to see the heavy commercial adoption since the introduction of AIP. Commercial partnerships have grown 70% year over year. Why track the companies that Palantir works with? And this person basically said that this would be really interesting to kind of see how those companies end up playing out. And so I'll link the thread in the chat and you guys can take a look at it. But it was really interesting because you looked at aviation, automotive, robotics, financial services, and banking. And when you put all those companies together, Palantir-powered companies have outperformed the industry average of the ETF, that the industry that they're based in, by over 50%, which is really interesting. So it's one of those things I've been looking to do for a while, and I'm probably going to dive deeper into this research. But the worst performer was BP at around -6%, mostly down to macro. Oil prices were down this year. That's why BP was down. The best performer was Ferrari at 121%, outperforming a lot of its competitors as well. So I thought this was an interesting trend. And again, this goes back to what management was saying in Q2, which is that, hey, if you think there's going to be more momentum in the broader value proposition that Palantir provides to their customers, then obviously you're going to see that in the results, and those results are going to lead to customers probably choosing Palantir more often than other companies as well. Cindy said, I love this ETF idea. Yeah, I really liked it. I thought it was really cool, and I want to expand on that. And I want to, because there's so many we know, BP, Airbus, Eaton Corporation. I mean, there's so many of these public companies as well that all we can do is just download their data in terms of earnings growth, put it against like you could take an industry ETF like XLE, the energy ETF, see how it does for year to date, and then take all the energy companies Palantir works with, or same thing with healthcare, and just compile them and look at the comparisons and see if you can attribute any level of outperformance potentially to Palantir, given it powers a lot of those companies. And it is like kind of the core operating system for a lot of those companies as well. Okay, what do we got going on in the pre-markets? We got PayPal up a little bit. SoFi up about 1%. SoFi actually doing really nicely in the pre-markets. SoFi had 5% days on Friday. It was up, I think, 10% last week. It's up another 1% right now, showing nice momentum. And hopefully that continues to break out to that $8 range. I think there's no reason SoFi should be less than $8, given we know that a rate cut is undoubtedly coming. So hopefully that momentum picks up with SoFi and it continues to do well. Snowflake down again in the pre-markets by about 0.8%. So Snowflake just not catching a bid. IWM up 1%. That's actually a little surprising to me, given that oil's up right now, and that kind of the broader market is a little bit more volatile, just given some of the geopolitical concerns over the past 24 hours. But IWM and small caps not doing too bad. Not doing too bad at all. Nvda actually is down. I think this is when we should transition and talk about Nvda. But Nvda right here at 129. I mean, it's up a little bit, but it was up in the 130s in the pre-market. Now it's at 129. It was up 5% on Friday. Nvidia pretty much gained all of the losses that it had from Thursday. We had a small sell-off on Thursday, and it's because investors are getting really excited for this earnings report. So let's talk about what I expect from Nvidia. Personally, I expect them to crush because SMCI raised guidance and TSM crushed on their July sales. There's a big backlog of orders. The bear case, which is the Blackwell delay, I think is not a bear case. I think they're still booked in demand. I think people are just going to buy the H100 if they can't buy the Blackwell chip. And so I don't think that's going to hurt NVIDIA at all. I think NVIDIA is going to do very well. Now, having said that, the market also agrees with this. So Loop Capital put out a report. They said, hey, we have a price target of 175. They said, I quote, our work suggests that while Blackwell is in fact delayed, as we first wrote about it on August 5th, it may be more like 120 days versus 90 days, although it may not matter as much. Hopper yields from TSMC continue to improve, and the amount of increased Hopper production through the fall may outweigh the amount of Blackwell foregone by the pushout, basically saying other chips will be able to resolve some of the problems they have right now. As we discussed below, while there are some that mix down the Hopper and Blackwell delays, there remains substantive upside to the street expectations. We convey our thought process below. Our $175 price target is based on $5 to $6 of EPS that they expect in calendar year 2025, with a 29 to 35x PE on that $5 to $6 range. And that's how you get to that $175 price target. So you got Loop Capital, one of the more bullish companies on NVIDIA, that feels NVIDIA is going to be fine. And then you've got a couple of other companies that put out a $200 price target today. I'll see if I can find those, but I think one of them was Goldman Sachs that says, hey, we just think demand is not going anywhere. And because we think demand is not going anywhere, we're pretty bullish on what's going to happen with NVIDIA. So I think NVIDIA is going to do well. I think they're going to crush. I don't know how the market's going to react to it. So far, the earnings options volatility is insane. We're expecting 10% up to the downside or to the upside. And the 130 call on Nvidia for August 30th has the most amount of open options. So August 30th, 130 call, 125,000 options are open on that call. So people are pretty bullish that the 130 call ends up printing. If we look at the put for 100, let's call it 110, that has about 34,000 that's open, and the $100 put has 35,000. So you've got a put to call ratio that is definitely skewed to the call side. Even the 140 call has about 50,000 contracts open. More people are bullish than bearish, but there is so much volatility going into this report that you're going to get some type of move to the upside or downside. And I don't think it's going to be flat. I think it's going to be pretty volatile one way or the other. Temu or PDD got crushed. Yeah, so PDD, Pinduoduo, the holding company of Temu, they had earnings today. They're down 19%. I read through their earnings report. This is, again, why it's a little hard to invest in companies that are building these Chinese assets. Essentially, they said, hey, the Chinese consumer is a bit weaker and our profit margins are going to decline. Temu itself, the profit margins aren't the best because Temu basically sells everything at a loss. And they said overall revenue growth is going to take a little bit of a hit. So they basically told the street, yeah, you should expect some pain when it comes to Temu, which is their largest asset in Pinduoduo. And that's why the stock is down right now about 20%. I don't really know if it's a buy the dip. I got to go deeper into their numbers and see if there's warrants a buy the dip. Price of sales of 35 on this company, market cap of 200 billion. I mean, I don't know, dude. PE is a little reasonable at 18, 1.39 billion shares outstanding. And then you've got the China risk. Like, there's just nothing that attractive about this one. But this one is down 20%. No way you say Temu like that. What, you call it Temu? There's no way you call it Temu. It's Temu, bro. You call it Temu? I don't even think I'm weird for calling it Temu. It's like, I say Temu, not Temu. Who the hell calls it Temu? It's Temu. Like, there's no way it's Temu, dude. I mean, I guess you could call it Temu, but I think it's Temu. Okay, let's get an update as well on the consumer. So after Jackson Hole, Jeffries put out some analysis on how they think where the consumer is and why they're not nervous about the labor market. Again, I started the show with, we need to only care about the labor market versus inflation because that's going to determine everything. Here's why Jeffries thinks that the labor market is fine and that after Jackson Hole, we should be in a pretty good situation.
Yeah, I heard everything that I wanted to hear from a dovish perspective. He's ready to go. I like the ample room in the tank to tackle any risks. I think that Fed put structure is really what's been fueling this market all year, which is the idea that if things got messy, they got a lot of room to go, and they could cut very quickly. And I think he made that very clear. That I think the market loves to hear. But everything there was data dependent. But if things get messy, we know we've got a lot of risk adjustment coming from the Fed quickly. And I think the market feels very secure in that. And that's why they're buying. And that's why we are where we are at this point in the year, up 16, 17, 18%.
Yeah, for sure. Paul, a couple of years ago, and even more recently than that, if you had asked Jay Powell, we're going to get a soft landing, and he'd be like, couldn't guarantee it. Maybe it won't be possible. We have to see what inflation does. Market's been kind of banking on that scenario to varying degrees. Have we kind of gotten there already in terms of we're kind of priced for a benign environment?
Yeah, no, I think we've come in markets. I mean, you look at, we're within 1% of an all-time high in the S&P 500. So we've come full circle. The market and Jay Powell are all lovey-dovey again versus 2 years ago when he went scorched earth on the market. So we've really had a turnaround here. The market is at highs, but we've done nothing since mid-July. The market's basically where it was Wednesday. So there's a lot of sound and fury like Macbeth, but signifying nothing. Yeah. But at the same time, you got to look at what's happened. Since the high in July, you have the S&P down 0.1%. But the Russell equal weight, the S&P equal weight is new highs. You have the NASDAQ down 4%, and you have the semis down 12%. So we're seeing that broadening out of the market. And I think that's something, when you just look at the indices and say, oh, nothing's happened, there really has been some rotation.
No, there's definitely some nuanced kind of reshuffling of leadership, I guess you might say. And, we tried it in late July, the rotation for small caps and banks, kind of had a little bit of a gut check after that. We'll see.
But so small caps, they were the most overbought a U.S. index has ever been in mid-July. When you look at at those prior periods, 4 standard deviations above their 50-day moving average, you invariably see a short-term pullback, which is exactly what we saw. 1 year later, they were always higher.
All right. Well,
so speaking of small caps and the broader macro, and again, to summarize what they just said, basically the consumer's in a good spot. Unemployment is not something to have a concern about. And if we have any like major concern about unemployment, the Fed is going to aggressively cut rates. Now, if the Fed comes out and they cut rates by 100 basis points, that's probably going to be interpreted as bearish. However, for the stock market, I've been kind of saying that there is this Goldilocks zone. There's this period of time, even if it's a couple months, where as assets get inflated in terms of equity valuations because rates come down, meaning Robinhood growing at 40% year over year is simply worth more on an equity premium basis when you don't get 5.5% risk-free adjusted, because like what is growing and compounding 40% year over year? That's why in 2021 equities went up so much. Even if there is this inevitable recession coming, which is why the Fed cuts rates so aggressively if we get bad unemployment data, I still think the stock market will be okay for a short amount of time. And that will be the opportunity to just get out of the market and take your profits, because equities will go up even though things will collapse. Now, the opposite could happen and the market could price in, oh, well, we're going to get a massive recession. So even if we cut by 100 bips, that's not good for equity valuations and things are about to hit the fan because you're pricing in the future growth or the lack of growth because of this recession. That could also take place. But so far, we haven't seen the unemployment data that signals that the Fed would have to do that big of an emergency cut, or that the unemployment data would warrant the Fed not having to take their time by 25, 25, 25 over the next 3 months and casually doing it the way the market wants it to happen, which is a stable decline of rates as unemployment stabilizes at 4.3. And as long as that happens, I think the market's going to be in a good situation. And that's what Jeffries and a lot of these other banks see as well. Now, one thing that's really interesting here, what's really interesting, look at USD JPY. We're at 144 yen for $1. Now, why does this matter? Well, take a look at this 1 month chart. Yeah, let's do the 1 month chart right here. So on August 5th, we dropped to 142 yen per dollar on the conversion. Remember what else happened on August 5th? The entire market collapsed. The S&P was at 507, NASDAQ at 420. We're at 144. So today we are at levels basically that we were at on August 5th, and the market is at basically all-time highs. So what's happening? Well, what I think is happening is that essentially the market has started to not care that much about the carry yen trade having some diabolical risk to destroy the market. I think a lot of yen futures have been covered in terms of the short position that they've had. And on top of that, I think this is why I was so excited on August 9th when the Bank of Japan basically said we're not going to cut or we're not going to raise rates. That led the market to feeling confidence that no matter what happens in terms of the conversion between the yen and the dollar, they have the safety of the Bank of Japan not collapsing the markets. Remember, I mean, the reason the market really fell on that carry yen trade was not only because the yen fell from like 160 to 142 in comparison to the dollar, but the Bank of Japan raised rates a week before that. And when you put that on top of the bad labor report and then the Nikkei falling because they kind of got blindsided by this, the worst since 1987, that's where you had the VIX spike to 65 and then the markets collapse. So it kind of feels like we can live in a world where USD to JPY is at the same levels that it was at on August 5th without having some catastrophic crash. And that's good because we shouldn't have this one metric having to be super, super high, Pinduoduo now down 21%, just for the market to maintain its momentum. So I actually think it's bullish that the market's able to interpret that as not bad and continue going from there. S&P 500 now inching much higher in the pre-markets. Look at that, up about 0.25%, 563.4. 565 is the level that hopefully we get to test today. And if we can test it, we are back to all-time highs as we end out the month in August, which would be very nice to see if it can end up happening today. SpaceX news. So we got the market open in 5 minutes. SpaceX had a great weekend because they got tapped by NASA to bring home our astronauts. So there's a couple of astronauts that are stuck in space right now. I know that's like crazy to even say, but like they're stuck in space. And they were going to come home on a Boeing capsule. Instead, NASA said, you're not coming home on Boeing. You're going to stay in space for the next 7 months, and you're going to wait till early 2025, and SpaceX is going to send something to pick you up. And I thought this was really interesting for a lot of reasons. Number one, it goes to show that Boeing is just in a horrible situation. Boeing gets so much money from the government, Boeing down about 1% in the pre-markets. They get so much money from the government. It's starting to finally feel like NASA is thinking that they just can't trust Boeing anymore, given all the different things that have happened this year with Boeing. So if they can't trust Boeing anymore, well, who do they trust? They end up trusting Elon Musk because he's the one who's built a company that can actually, you can rely on him to get the rockets to come back and be reusable, and hopefully to get people to come back as well. So what Elon tweeted a couple things about this. Elon says the astronauts will be the furthest from Earth since the Apollo moon missions and do spacewalks that is also furthest from Earth ever. So he's talking about what the launch mission will look like for the new launches that NASA is considering for Polaris, which is going to be really interesting. And then specifically on Boeing, Elon essentially said that we're coming for them just like we came for the legacy car industry. So there's a tweet right here that Elon said this morning that I thought was really interesting. But essentially he said, hey, legacy car manufacturers thought they can get away with like being incompetent, and that's why Tesla started to beat them. The same thing is going to happen in the space industry, and they're likely going to win over the long term. Let's see if I can pull up that exact tweet. Yeah, right here. So what he says, just as the car companies did not dominate the medium of air, this is the tweet right here. They try to, the aircraft companies will not dominate the medium of space. So you've got a big proclamation by Elon basically saying, hey, space is a global commercial market. The TAM is growing. Boeing is not. If the government can't trust Boeing to bring back a couple of astronauts, and the government is so afraid that something would happen to those astronauts on a Boeing aircraft, which, I mean, if that happens, that's just the worst PR for NASA ever, that they're saying, hey, stay in space for like 6 more months away from your families and wait for Elon's SpaceX to come up to pick you guys up. That's a hell of an endorsement for SpaceX. And that makes it more sad that the government, in terms of this political administration, doesn't acknowledge Elon, because those astronauts need to come home safely. And Elon has the only company on the planet that can get them home safe. Right. So I would imagine Elon's, you could tell Elon's resentment towards the current administration if like you're building the most important things for the government, NASA, et cetera, and you're not really getting any acknowledgement. But nonetheless, it's very bullish for Tesla, very bullish for Elon, and overall very bullish for the space industry. Implication for Rocket Lab? Well, my thoughts on this are pretty basic. I think if SpaceX succeeds, Rocket Lab's going to succeed. Rocket Lab basically flat right now in the pre-markets. The TAM for SpaceX seems like it's in the trillions. The market cap is $200 billion. Given how important it is, given how NASA tapped it over the weekend, I would imagine that SpaceX IPO is closer to 300 to 400 billion. It's probably going to be the biggest IPO ever in the technology space. And Elon really doesn't need to IPO. He has enough liquidity, and he probably doesn't want to talk to shareholders every 30 days. So like there's no desire for him to IPO, but if he needed to, you would command a hefty premium on it. Starlink is growing like crazy. And I think when you put a real market cap on SpaceX that can be publicly traded, Rocket Lab starts having comparable numbers, and people start thinking Rocket Lab at $3 billion is cheap. So I think it's bullish for Rocket Lab in general, the more SpaceX continues to win. And it's not as competitive as it is comparable, which ends up helping the company overall. All right, so we got 20 seconds until the market opens. Let's see what ends up happening. This is the first week since the markets are officially pricing in Jackson Hole's inevitable guarantee of a rate cut. Nvidia's on Wednesday. That's going to be a monster earning. So let's see how this ends up playing out, and let's see how the market opens after the first week since Jackson Hole. There we go. Thank you, everybody, for being here. It is Monday, August 26, 9:30 a.m. The stock market is now open. Wake your ass up. Here we go. Monday morning, baby. S&P 500 opens up about 18 bips on the day. You got it at 563. We're going to see in the next couple of minutes what direction the market decides to head in, but not bad on the open. 563.15 right now. Chevron is up 1%. ExxonMobil up 1.34%. XLE, the energy ETF, up 1.28% because energy and oil, WTI crude, up about 3% on the day. Bitcoin, 63,751. The fact that we're holding the 60s is bullish to me. Is down from 64,000. It hit 65,000 just quickly on Sunday morning, then came back down. But 63.7, not bad for Bitcoin. Meta, down about 0.5%. Tesla, down about 1%. Roku, down about 0.33%. Roku got upgraded by Guggenheim on Friday, I think to like $80 or something. They were up 15% on the news on that day. Kathy Wood still has a big position in this stock. She sold out of Zoom. So she's out of Zoom, but she's still in Roku. And they got upgraded on Friday. Robinhood falls about 0.5%, $21.02 on the day. Did close above 21 on Friday, which was really bullish. Celsius at $40, PayPal 72.33, SoFi 757, up about 0.5%. Snowflake now green on the day. You would imagine Snowflake has some green this week after falling 15%, but it depends if anyone comes in with the bid on Snowflake. Snowflake right now, 116.51. IWM up about 1% on the day. I would really love to see small caps continue to catch a bid because it means the market is starting to broaden, which would not be bad. S&P 500, 563.4, now up about 0.25%. Palantir is down 1% on the day. Again, I already talked about it. If you're just joining, I think in general, Palantir is going to take a little bit of a breather because the stock is up 94% and people are going to take some profit. So that is the only reason I think Palantir is down. I don't think there's anything fundamental about Palantir. There's no research on Palantir that came out that would suggest the market sell it off. I really just think a lot of people are coming back from vacation. It's up a lot. They didn't expect it to be up this much. They're taking some profits. And that's pretty much it. Holding 30 would be super bullish to me, but even if we touch 27 again, I don't think that's the worst thing in the world. What else do we have? XLF financials are up about 0.5% right now. Regionals are up 1%. That makes sense. A rate cut's coming. That's going to be very bullish for regionals. Walmart up about 1/3. Target up 2%. Target having a great Monday morning after last week, going up 12%. So Target had a great week. Lowe's is up 0.3%. Intel down 0.5%. Eli Lilly down 1%. Carnival Cruise down about 0.25%. DJT down 0.18%. Trump again is tweeting every day on Twitter. So I guess that's kind of the bear case for Truth Social that Trump is back on Twitter, but he is using Twitter a lot. 167 on Google. Let's look at the Mag 7 and let's see what we have on the Mag 7. Meta's down, Microsoft's up, Apple's flat. By the way, Apple's getting into robotics apparently. This is Apple's new, we'll talk more about that. I think it's a very interesting space that they're trying to go into, but they're exploring humanoid robotics. We'll talk about that. I don't know if that's the best strategy, but Google at 169, Amazon 176, Nvda back at 130. There you go. The bulls are in control in the first 3 minutes of the market open. Google up almost, or not Google, Nvda up about 70 bips right now, 130.33. And then Tesla right here falling at 1.3%. I don't know why Tesla's down. Don't have any information why Tesla's down. But Nvidia I think is up on its way into earnings. We did get one piece of macro data today, which was durable goods. So durable goods came in way above expectations. Durable goods orders in July surged by 9.9%. The market was expecting them to go up by maybe 4%. So you get a nice 5% beat. Now, if this was 3 months ago, I would say, oh, this is really bad for inflation because that means we have too much growth. And too much growth is obviously bad because we need inflation to come down. Now it's the opposite. Now the economy is starting to weaken. So now this is really good news. You want to see consumers spend a lot of money on durable goods. And this makes sense because retail sales data was up 1% in July compared to 0.4% on the estimate. So it makes sense that things like durable goods also would be up based on that retail sales data. So this is bullish to me. I don't think this creates a reacceleration of inflation because I think inflation in general is coming down. So good news ends up being good news, which is a good thing. Tesla down 1.5%. Does anyone know why? Is there any news on Tesla? There's one piece of news, but I don't know if this is the biggest piece of news. There was a humanoid robotics conference in Beijing over the weekend, and Tesla refused to show off certain elements of Optimus in that conference, probably for confidentiality reasons or whatever reasons they had, but they didn't show off the Optimus robot in the conference. Maybe that's why the market's selling it off. I think that's such a minute reason though. So I don't think that's a big deal. But that was one thing that happened over the weekend. By the way, humanoid robotics, if you're doing research, given we were talking about it on the context of Apple, China is ramping up their humanoid robotics spend aggressively. And China is basically telling the market, we are coming after the humanoid robotic space. I think it's going to be not a big market for China. And the reason for that is because ultimately America has to buy those robots. Like they can sell it in China, that's fine, but America has to buy them. And American industries have to buy them. And I don't think any American company is going to buy a Chinese robot. And if they do, I think that American company is in a world of trouble because I don't think you want Chinese robots running around your enterprise collecting data and like feeding it back to the CCP. So I think the Chinese humanoid robotic industry is going to be inside of China. I don't think it's going to expand like Tesla or Figure or some of the other companies can. Tesla now down 1.5%, Nvidia 130. But that is something to think about when it comes to humanoid robotics in general. Let's look at the semiconductor stocks and how they're moving. Wow. All of them are down besides AMD and Nvidia. Look at that. Nvidia's up 1%, AMD's up almost 2%. Everything else is down. Dell is up a little bit. Dell has earnings on Thursday. If they show operating margins growth, Dell is going to crush it. Like, I think Dell can go up 10% if they just show up a little bit of operating margins growth. If they show barely any, if they show like 1%, I think they should show 3 to 4%. If they're stuck at 0, like they're currently at, or if they only show 1%, I think the stock is flat. But I don't think Dell tanks because I think all the bad news is baked in. Now it's just a question of showing operating margins, which will be bullish for them. SMCI down about 0.44. ASML is down. ON is down. Intel is down. Marvell is down. They have earnings on Thursday as well. Lam Research is down about 1%, and ARM is down 1.4. I have no position in Dell just because, like, I'd rather buy Nvidia than Dell, but it has rebounded from like 85 to 112. The question now is simply operating margins. That's going to determine the entire story. And we saw that with SMCI. SMCI fell to 485 just because their gross margins fell from like 15 to 11%, which obviously was not bullish for them. Nvidia is trying to go to 131, man. Nvidia is trying to go to 131. Wow. Nvidia is trying to go to 131 right now. This is bullish. Elon's not selling. I don't think Elon's selling. One of the other good things about SpaceX, someone was like, well, how does SpaceX relate to Tesla? Well, if SpaceX goes up and the valuation goes up, if Elon needs liquidity, he can just sell SpaceX instead of selling Tesla stock. So I think that's really bullish. If SpaceX, let's say SpaceX gets valued at $400 billion on the next round before they go public, and Elon needs to do whatever he needs to do, instead of having to sell Tesla stock, he can sell SpaceX stock, and no one's going to care that much because, Tesla's public and SpaceX is not. So I think that's also just another thing that's good for him at the end of the day. He put out a memo to ex-employees. The Verge got a copy of the email. He said, hey, you're allowed to get your stock options if you send me a one-page email telling me what you contributed to the company, which I thought was hilarious. So if you are working at Twitter and you send Elon a one-page email on why you deserve your stock options, you will be given your stock options. One of the most interesting employee RSUs compensation plan that I've seen, but that's how Elon is navigating it with Twitter. SoFi up 2%. Look at SoFi, 767. Not bad. Really love that on SoFi. Trying to touch 770. Again, I think $8 is where it should be on these upcoming rate cuts. S&P 500 up almost 0.5%. It's trying to make a run at 564 right now. 563.79, not bad for the S&P. Snapchat is flat. PayPal is up 0.5%. Where is Palantir? Tesla still down about 1%. Palantir 31.55. Palantir recovering just a little bit. Reddit at 59.57. Apple is flat. Dell is up 1%. Shopify 76.78. Now it's above 75. Ulta is flat. ELF is down 9%. I don't know why ELF is down. ELF is down. Why is ELF down? It's funny that ELF is down, but Ulta is not down. ELF, it looks like there's some tariff news. So Canada came up today and they had some news on increasing tariffs. I don't know why this affects ELF though. I mean, there's probably some implications for ELF, but a 9% down day because of tariffs from Canada, I don't think is the reason. So maybe there has to be a better reason why it's down. But yeah, not really sure why ELF is down. Ulta not getting any of the pain from ELF that's happening. Ultimate Cow says, just like the movie Elf is overrated. I agree, dude. 100% the movie's overrated. I mean, it's a good movie, but it's absolutely overrated. Nvidia 130.8 up about 1.09%. Rocket Lab down 3% on the day. Again, Rocket Lab was up like 30% for the month, so I expect some volatility here, but that's down 3%. S&P still gaining momentum. Netflix 688, Palo Alto 351. Where's Crowdstrike? They have earnings this week as well. Crowdstrike 271. They are green for the month and green for the year now. Enphase at 128.49. Enphase, wow. When did Enphase get close to 130? That happened under our nose. I did not see Enphase getting close to 130, but Enphase up 4% on the day, probably getting a bid as we get into the rate cutting cycle. Shopify at 76, Disney at 91, Apple at 226, XBI biotech ETF basically flat on the day, slightly green. Palantir still red. And then again, Nvidia doing okay. Crypto stocks, Robinhood at $21 even. The rest of the crypto stocks down or flat on the day, given that Bitcoin's down from where it was on Friday. MicroStrategy down about 1%, Coinbase down 1%, CleanSpark down 2.3%, Bitfarms down about 0.4%. Pinduoduo is down. We talked about it. I don't think this is a dip to touch at all. Because Temu, or Temu, if you guys want to call it Temu, is struggling. And they basically said in their earnings report, the consumer is struggling in China and the consumer is weak in China and profit margins are going to go down along with revenue. I mean, they were very explicit in their earnings report that revenue growth and profit guidance is going down. So that's why they're down 25%. I don't know about the financials enough to think if this is a dip to get excited for, but the China risk just makes it unattractive. And so something I wouldn't touch, but that one is down 25%. Alibaba is down 4%, probably because Pinduoduo is down. Again, I think Alibaba is the most undervalued company in the stock market, but it's not that hard to stay away from it given the China risk. Like the China risk makes it untouchable, in my opinion. It's just like, why there's so many good American companies. Why would you touch Alibaba where you just don't know what's going to happen in China? So that one taking a little bit of a dip as well from Pinduoduo. Is Amazon down because of that? Could Amazon be getting hit because of that as well? Yeah, Amazon's down a little bit. I don't know if it's mainly because of Pinduoduo, but they might have said something about their supply chain in China. Amazon obviously starting to compete with Temu and sell a lot of stuff from China as well directly. So maybe that could have some implications on Amazon, but I would imagine it's not that much. How many people shop from Temu? How many people have ordered something from Temu over the past 30 days? Put it in the chat. Ironically, I went on their app the other day because I saw a headline that Shein was suing them. So I just went to check out their app because I haven't checked it in like a couple of months. And I just looked at it and I was like, dude, buying something from here like feels like a scam. Like I think I've ordered something on it like a year ago, but it just looks like trash, dude. It looks like a lot of trash. And it's just like cheap trash. That's all it looks like. But granted, it's cheap. And the American consumer, dude, if you have any concerns about the American consumer, just go to TikTok, #Target, and you will see the American consumer is fine. And I know I'm being hyperbolic here, but the American consumer, they find a way to spend. And at Target in particular, the amount of American like moms that just go to Target and just go in for like groceries, but end up leaving with a $300 bill. It's insane, dude. It's just insane. IWM up 0.5% right now at 221. So the American consumer continues to spend and they love cheap stuff. And you would imagine that Temu is attractive given its cheap stuff that's essentially selling at cost, but is attractive for the value proposition. Crossroads says the only way I feel okay ordering from that company is when I use PayPal. Yeah, it makes sense. At least help PayPal's transaction volumes on that. But it's a lot of junk, dude. It's a lot of junk. And it's a lot of fast fashion at the end of the day. Where's Lockheed Martin? Lockheed Martin, 558. That's at all-time highs, along with Raytheon. Both of those companies' defense has done very well. Gold is also surging. If anyone owns any gold, you've done very well. Gold is up another 1/3% today. And gold over the past 30 days, if you just look at it, it's pretty incredible. I mean, it's pretty incredible. We started the year basically at 2,400, and now we're at 2,524, which is not bad at all. Silver also up about 0.21% on the day. So rate cuts are bullish for gold. At the end of the day, the borrowing costs become cheaper. So that's like positive for gold. If some people are saying, oh, well, there's like gold's trying to tell us something scary is happening in the market. Like, yeah, you could interpret that as well. But in general, again, rate cuts are so bullish for valuations of asset classes that are asking you to take a little bit of risk to invest in them. Because at the end of the day, the risk-free rate of return of a money market fund or a high yield savings account is going to go down, which means an injection of capital will leave those, I wouldn't even call those assets, but those areas where you can collect yield and go into things like crypto, real estate, the stock market, and gold and silver, etc. So rate cuts are going to be bullish. Again, the only thing I'm concerned about is the unemployment rate. As long as the unemployment rate doesn't go up when we get the rate cuts, the broader market will rally. But if the unemployment rate jumps dramatically, which I don't think it will, then, gold, everything is going to suffer because the market is going to start to price in a recession. Snowflake now at 117, up 1.3% of the day. So Snowflake going up. But in general, the data that I'm looking at right now seems like that's not going to happen, which is why I think this is a good bull rally. And I think dips are meant to be bought in this rally. And we might get a dip in September. Again, Septembers are relatively volatile. Hopefully this September is not as volatile, but with the election coming up, with a lot of macro data coming up this week, there's going to be a lot of things we have to look at to see if we can maintain the Jackson Hole momentum. This week in particular, we're looking at a variety of things that are happening. Let me pull up the list for this week. So this week, what we are looking at is July durable goods data we got today, consumer confidence tomorrow, Nvda obviously on Wednesday. Then we get Q2 2024 GDP data on Thursday. which is also going to be really important. I think it's going to come in closer to 2% or above 2%. If that's below 2%, that's not good. I'm pretty sure that will be like 2.5. If it's at that 2 to 2.5 range, that's going to be good. Then we have home data on Thursday, and then we have July PCE inflation data on Friday. If we get decent GDP data, if Nvidia crushes and home sales data is good along with PCE inflation, I think market's going to do well. But if any of those crap the bed, then it's not going to be the best for the broader market. Nubank is up 2% on the day. If you own Nubank, congrats. This stock went from 7 to 14 in the better part of 8 months. So Nubank up 100% from those levels. Palantir now down about 2% on the day. We might be finally seeing some real volatility on Palantir, down about 1.84% right now. Again, there's no real news I'm looking at for why it's down. Nothing that I saw over the weekend. No macro data. Even the articles on Seeking Alpha, dude, that tend to be bearish on Palantir. I'm looking at a lot of the articles. They're like, hey, the stock's cheap at 30. Just like, all right, so everyone's getting a bit bullish, which maybe is why, the market's selling off. Because when people tend to unilaterally be bullish, you start to see a little bit of downside pressure going against kind of the consensus narrative. And in general, I think people are taking some profits. And that's pretty much it. Where's SoFi? Is SoFi getting a bid? Wow, SoFi 770. Not bad. Not bad on SoFi. It's getting some love. SoFi getting some love. Again, I kind of think $8 is reasonable for SoFi. I think it is going into the rate cut. It makes a lot of sense. Their lending business is going to dramatically grow in Q4 once we get probably 2 rate cuts, which is going to be effective. Nvidia right here at 130, a little bit of a red candle right there, but we're still at 130. And Snowflake right here at 117. Doug says, we always knew September was going to be a tough month. Yep, I agree. Nemo says Palantir is fine. It can't keep going up all the time. I also agree with that. At the end of the day, it's probably going to have to take a little bit of a break. 31.15 right now, down about 2%. Okay, let's get an update from Deepwater on why the market is still underappreciating AI. And this is a little bit of an Nvidia earnings preview going into the print. Let's see what he has to say. They've been long-term bullish on Nvidia. Let's get their perspective, and then we will keep going from there.
Have been waiting for since the August market sell-off. Yes, Nvda will report earnings on Wednesday after the market closes. The company is expected to address the Blackwell delay issue on the call. Joining us now to talk about Nvda and how that can impact big tech and overall market sentiment is Gene Munster, Deepwater Asset Management Managing Partner. Gene, thank you for being here. Important big week. You think the odds are skewed that Nvda actually trades down on earnings. Why is that?
Well, you hit the pressure point right out of the gate there, and that is, of course, related to this Blackwell delay. Last quarter, Jensen Huang said that they're going to have a lot of Blackwell demand, a lot of Blackwell revenue, specifically in calendar 24, and I suspect that that's going to be modest revenue. We're talking about a 3-month delay. And ultimately, I think that for investors who are just hyper focused on every minute of what this company is doing, that could be viewed as a slight negative. Also, keep in mind the stock is up 30% over the last 3 weeks, just shy of 5% of its all-time highs. And so there's just a ton of noise around the quarter, but I think this Blackwell piece is probably the most important X factor about the quarter. And so that's kind of why I think that the stock is going to trade down modestly, but I don't think that stock action should be representative of the opportunity Nvidia over the next couple of years.
So, I mean, this is a company that does have a history of over-delivering, regardless of the promises it makes. Do you think this time will be different? And if so, if it does trade down, do you think the knock-on effect for other big tech names could be even more sizable in magnitude?
I think that's the risk this week, of course, and just to zero in on the next 5 days is that the market is going to be, this is the only thing that matters to the AI trade this week. It's obviously the biggest factor in general, but of course with the earnings. And so, yes, I think that if there is a modest pullback, I think if there's anything around Blackwell, I think that could be perceived as a negative for kind of broader tech, that especially the mega caps that have enjoyed some of this AI movement here. I still think we're very early in this, but again, I want to frame in that I think that trading in the near term doesn't impact what's ultimately going to happen. And I think that investors are going to get hyper focused this week, but it's ultimately going to probably miss what I still believe is the biggest opportunity we've seen in 20 years. I still think that we are in the early innings of a 3 to 5 year tech bull market that's powered by AI. And I think that many of these big tech companies are going to do well over the next couple of years as that starts to go. So yes, I think this is going to be probably a more difficult week for broader big tech, but I think that ultimately shares are going to recover quickly as investors come to grips with, I think, is a stronger AI trade than what many believe is today.
So I think that if Nvidia does not put up a guidance beat, a earnings beat and a guidance raise, it's going to be in a tough situation. But I think they're going to do that. And so because I think they're going to do that, I think we're going to continue to get more momentum. I like, is there a world in which Nvidia sells off after a earnings beat and a guidance raise? Yeah. But like, it doesn't feel as likely given how much momentum there is on the buy side for Nvidia in terms of just bullish momentum. Like the market would have to really feel, oh, this was like a good quarter, but not as good as we expected, which again, if you want a blockbuster earnings on Nvidia, they've got to be as good as like they've got to absolutely crush. There's just no way to put it against it. And if they do crush, I think the market's going to reward them. I really do. But it's going to be a question of if they can end up pulling it off. The only way I also think they don't do well is if the guidance raise into Q3, if they raise guidance, but not as much. And the reason they explain, so the reasoning is going to be the most important. If the reason they give for why the guidance raise isn't as substantial is because let's say Jensen says, we expect our largest customers like Meta and Amazon to not spend as much as they spent in Q2 during Q3, even though they're going to beat on guidance. That immediately tells the market, holy crap, these companies are cutting back on their CapEx spend. And then it begs the question, well, why? And then, the logical take is, well, they have enough GPUs, which means that NVIDIA's future earnings are going to get in trouble. But the other logical take is, well, wait a second, do these companies have some internal problems inside of their companies going into Q3, which is why NVIDIA says they're going to slow down a little bit on the CapEx spend, which means that those companies' core businesses are struggling a little bit, and they don't want to have their net income margins be affected by spending more on CapEx. Those are two ways to bearishly interpret what could play out. But in general, I think if they just say, hey, people are going to keep spending and the guidance goes up into Q3, I think you're going to get a market that rallies. Like, I just don't think the market sells it off, especially given how many institutional investors are long NVIDIA. Take a look at this chart right here. So this was the S&P end of year target for 2024. The most bullish of bullish investors thought 5,400 would happen. That was by Yardeni. Fundstrat at 5,200. Oppenheimer said 5,200. Bank of America said 5,000. We're currently at 5,600. So pretty much every analyst got it wrong in terms of where the S&P 500 would be, pointing to the fact that no analyst really thought the markets would expand the way that they had. Really, none of them assumed the AI trade and the quote-unquote soft landing would happen at the same time, but that's kind of what's happening. And as a result, the markets have gone higher. So I think we'll have some more volatility in September, but so far, pretty much every analyst on the street has gotten it wrong, given they weren't bullish enough in terms of what was happening on the market. Another piece of data here that I thought was really interesting on Friday. So on Friday, when Jackson Hole happened, 90% of stocks were up, and 90% of stocks were up on 90% higher volume. This is the first time this has happened in 90 day since the bear market of October of 2022. So again, 90% of stocks were up, and they were up based on volume that was higher 90% of the time. This has only happened one time in history, and that was 1980. And what happened after that happened in 1980? A year later, the S&P 500 was up about 14.3% on average. So in general, this was a bullish thing to see on Friday when we had a lot more momentum. And it was really important for the S&P 493 because it wasn't just the Mag 7. It was a lot of other companies participating in the rally. That's why we saw small caps continue to get a bid and get some momentum. And overall bullish for the broader tech landscape as companies outside of the Mag 7 were able to get some momentum. All right, what's going on in the markets? Palantir down 3%. Wow, the first bit of volatility we've seen on Palantir in basically 2 weeks. Last time we saw Palantir really get smacked, it went to $20 on August 5th. Since then, it's only been up and up and up. So basically 21 days on the dot, 26 minus 5, 21. So about 3 weeks since Palantir really got hit with some volatility, down 3% of the day. Let's see if we hold 30. Let's see if we hold 30. I think now's the question of if we hold 30 or if we drop down below. SoFi getting a bid to the upside, up 2.39%. S&P 500 still green on the day. Nubank 1479, S&P 563. Amazon is down. Crowdstrike's down. ELF is down 8%. I still don't know why ELF's down, but that's down. Oil up 2% on the day. Any oil stock basically up 2%. Tesla's down. I don't know why Tesla's down either. Meta's down because Meta was at all-time highs last week, so it makes sense why Meta's down. Robinhood 2109, holding 21, which is important. Snowflake 118, that's up because that was down a lot last week, so it makes sense why that's up. PayPal 72, and then IWM still up 0.6%. Not bad. Not bad at all. Dougie says, I sold 600 shares of Palantir to take some profits. Today might be a good day to try to unwind some covered calls. Yeah, that's a good point. I mean, if you are overweight Palantir and you want to take some profits and raise a little bit of cash, if you want to buy the dip, I don't think it's horrible to take some profits. I also think in terms of covered calls, your covered calls are probably up right now because the stock went down. Palantir recovering a little bit right here, trying to test 31 again. And so today may be a day to pay a little bit of premium back to the market and get out of some of those covered calls that were probably underwater over the past couple of weeks as Palantir was surging. Now, again, I think 30 is the real level to look at, right? If it breaks below 30, then you probably are coming back to 27 and it'll stabilize there. But if it can't break below 30 and it hovers in this 30 to 32 range, I think that's also really bullish. And maybe you don't really take profits right here because that means 35 is the big target. Yeah, right back at 31. And 35 is the target towards the end of the year. I'm not selling any. I mean, it doesn't, for me, I'm very long on the name. I do have a couple of covered calls on my sister's portfolio, probably going to sell or probably buy back some of those because I manage her portfolio with her Palantir shares as well. And again, that 21 dip was really attractive, dude. I got her a lot of shares back in May when it dipped to 21. And so that was kind of my big buy the dip on Palantir after it fell on earnings. I don't know if we get another opportunity like that, dude. Same thing for my dad. I bought my dad a bunch of shares. Like, I don't think we get a 20% drawdown back to $21 like we did on August 5th or like we did after Q1 earnings where the stock fell 25%, but the earnings were great. I think even if Palantir delivers below expectations, the max pain we're seeing is 25, just because I think there's way too much liquidity. And you know why I say that? Management sold 5 million shares last week and the stock didn't move. Like, the stock stayed at $32. So it's one of those things where, like, there was so much liquidity, so many investors, whether it's institutional or retail, are ready to buy up these shares that I think trying to get back down to $20, which is why I think August 5th was a generational opportunity, unless we get a massive recession. I don't know if we get that price again. Also, compared to other SaaS names have suffered because they don't have an AI narrative. Palantir has the AI narrative, which is why Palantir has been given a premium. And a lot of those other companies just haven't been given a premium because the market's not sure if there is an AI growth story. So I think the dip is 25. And I think if we get to 25, it's a good buy the dip. I think even 27 is a buy the dip. But we really got to see if we break 30 because right now down 2% and not breaking 30 to me is still pretty bullish for Palantir. Also, the float is huge on Palantir. Correct. The float is also huge. So you would need a lot more sell side pressure to get it to go down. So yeah, I think, if you want to get out of those covered calls, I don't think that's horrible as well. 6 was arguably generational. IDK about 20. Well, we'll see. Maybe $20 ends up becoming a generational dip. 6 was definitely a generational opportunity, dude. And I mean, I don't have a $6 average because honestly, dude, I didn't have enough money. Like, I kept averaging down, but I didn't initiate a position at Palantir at 6. For those that initiated it at 6, I mean, dude, it's like, if my average was 6, I would just stare at it all day. I would get a photo frame of it and just hang it up on the wall and just look at it. I'd be like, yep, your boy did that. But that didn't happen. But I know a lot of you were able to jump in when it was $6-7 and initiate the position. I ended up doing that on Robinhood, so when Robinhood got to $6-7, I didn't miss that opportunity, but yeah, for Palantir, just couldn't average down that much. Nonetheless, I do think we got to hold 30. And if we break below 30, that's when it gets exciting to buy. At 30, it's just not that exciting right now, given the valuation has gone up there. SoFi really trying to crack 770, 772, up 2.59%. Volume at 5.69 million. Not bad at all on SoFi. SoFi really getting some momentum. 6.5 average, 5,000 shares. I love it. And average cost should not matter that much. It should be number of shares. So if you have a $6 average, I don't think you should be afraid to average up to like $15. If you think the stock's going to 200, right? You'd rather have 10,000 shares versus 5,000 shares at $6. But it is pretty sexy. It is pretty sexy to look at a $6, $7 average. It's pretty damn sexy. Hood holding $21 as well. Yep. Robinhood holding $21. Someone texted me a picture of Vlad liking a tweet because Twitter got rid of the likes on the tweet, so I can't stalk his tweets anymore. But they tweeted, I wish Robinhood partnered with companies so that the 401k inside of your Robinhood account or inside of your employer could automatically be synced with Robinhood. One of the reasons why Schwab and Fidelity get so many assets is because they partner with companies. So if you work at Palantir, for example, I don't know what company Palantir uses, but if you get restricted stock options, they're not going to be in your Robinhood account. They're going to be probably in like a Schwab account. What if they were in a Robinhood account, right? So that what if your vesting schedule on your fancy tech job vests inside of a Robinhood account versus a Schwab or Fidelity account? And Vlad liked that tweet from the person who suggested that idea. I think that's a hell of an idea, and I think that's very important. And I do think Robinhood is thinking about that. Now, you have to develop long-standing relationships with these employers. They have to trust your brokerage, all that stuff. But if Robinhood can get into that game where they work with the actual 401k providers inside of big companies, and then you can just get your stock inside of Robinhood account without having to go through Schwab or Fidelity and then transfer it, they're going to get a shit ton of assets quickly. Those assets are going to compile aggressively. So, let's see if that happens, but I think that's another leg of growth for them. I'm really curious about their August deposits. They had $500 million on August 5th. I think the volatility in August was great for the options market, and I also think that they probably netted close to $4 billion in deposits. And so when we get those August numbers in September, I think they're excited, and we're going to see how much momentum they end up pulling off for this month. All right, let's get an update from CNBC, and then we'll keep going from there and see what else we got going on.
Monday morning, and welcome to another hour of Squawk on the Street. I'm David Faber with Seema Modi and Wilfred Frost. We're live.
We are 30 minutes into the trading session, and here are three movers we are watching. Shares of Chinese e-commerce player Pinduoduo slumping, missing revenue estimates as concerns continue to grow around the Chinese consumer. The company warning revenue growth will face more pressure going forward. Stock is down 26%. Shares of solar energy company Solar Edge popping higher on news that the company's CEO is stepping down effective immediately.
That's got to be the craziest headline. That's like Solar Edge is up because the company is the CEO is going down. Or wait, no, Solar Edge is down. Okay, so that makes more sense. The CEO stepping down. But it's funny. Maybe Enphase is up because Solar Edge is down, and so the market's rotating a little bit more into Enphase. Nvidia is dropping right now. Nvidia just turned red from 130 to 128 right now.
Immediately. Shares a huge underperformer, though, on the year, down about 70%. And yes, we are watching Nvidia, a key driver this week with results coming after the bell Wednesday. Shares are up nearly 30% off their early August lows. More on Nvidia and how to trade it ahead on the show.
All right. Well, I want to.
Interesting. So Solar Edge was up 10% when the news came out about the CEO dropping. Now it's down 7%. So kind of the Chipotle treatment, or the Starbucks treatment. When their CEO get fired, the stock goes up. But now it's down, and Enphase catching a bid from that going down. Where is Nvidia real quick? Nvidia, yes, now it's down 0.46%. So the sell side pressure is coming. S&P is still up, even though Nvidia is down. Palantir right back to 31, rebounded really nicely. And SoFi still holding up, man. SoFi still holding up and gaining some momentum. So Nvidia's down, S&P 500 continues to stay higher.
Start, of course, by welcoming Wilfred back. Now it's like you've never left.
Yeah.
You were here in July, and I'm
March.
obviously quite pleased at this because it was a very long interregnum while you were not.
Only quite pleased.
I'm
Very pleased.
extraordinarily pleased to have you back on these shores and on this set again.
It's always great to be back. I love this place. It's always fun to be back. Yeah, part of the 4 weeks a year, and it does feel quite recent since the first week of July. Markets have had a roller coaster ride since then, and it is crazy to see how quickly pull back, bounce again, whether we're talking about the VIX, the 10-year, the expectations for rate cuts, the NASDAQ and the Mag 7 in particular. They've all basically where they were in early July, but if you snapshot in time, it doesn't tell you the full story.
Not at all. We had the vicious rotation, of course, that into smaller cap names. That was brief, relatively brief. We've had, as you say, the decline in the Mag 7, and then we've gotten a large rally SEMA, even as recently as Friday, on the back of course, somewhat unexpectedly dovish comments from the Fed chair, making it plain as could be that rates will be lower come the next meeting.
Seemed like Jackson Hole Chair Fed Powell really delivered what the market wanted. And now the question is just how big of a rate cut we get in September. Wolf, would you agree that financial markets a bit more exciting to cover here in New York than in the UK?
Oh, definitely.
Yeah.
I mean, 7 of your companies are bigger than the entire FTSE 100, something like that.
Incredible.
Okay, what's going on with Tesla, dude? Why is Tesla still dropping? So Elon just tweeted something. Elon said right here, soon there will be no point in recording FSD videos. Elon says it will be commonplace. So Elon basically saying Tesla FSD zero intervention drives will soon be so commonplace, meaning Elon's really confident in FSD progress. I can't find any other thing about Tesla that's pushing it down today. Really nothing that interesting. Oh, Elon did tweet this video over the weekend at Tesla headquarters in Austin showing more momentum in their AI build out. So this is their new giant AI training supercluster being built at Tesla HQ to solve real world AI. It's called Cortex. Again, when everyone says Tesla is just a car company, it's like, no, dude, there's a lot more than just cars about this. So you've got, their AI training supercluster. I'm confused. Why is the market upset with Tesla? Why is the market upset today? That's really weird. Kind of being down. SoFi up 3%, man. SoFi is really crushing it today. Robinhood 2105, Palantir 3115. S&P still green, even though it has a bit of a red candle. Nvda is now down about 1%. Again, that's normal. Nvidia's up 40% over the past couple of weeks. Tesla's down 2%. Not sure why. Fortinet's up, Celsius is up, PayPal's up, BitX is up, Bitcoin doing okay. Snowflake now 119, that's up 3%. IWM 222. Wow, small caps up 1%. One of the reasons why Tesla might be down is because we got Mag 7 money rotating into small caps. The whole Mag 7 is down besides Google. And Google is like 14 cents away from being red. Maybe it's not just Tesla. It's, there you go. Google's red. Maybe it's Mag 7 rotating, which is not a bad thing to see. It is not a bad thing to see Mag 7 rotating into small caps. I think that's very bullish. I think you need Mag 7 to consolidate. I honestly would not want to see Apple at $240 or Meta at $560 or Google at $200 or even Tesla at $250. I think all of that would be way too much, way too quick. I think if they get to those levels after Q3, you could justify it. But I think if these companies stay at these prices and they end the year at these prices, that is super bullish. Because then you don't have this super overvaluation kind of cloud hanging over you. Because then we just get back to July. If Microsoft goes to $460, Microsoft is not worth $460. You can't justify that no matter how you slice it. The earnings growth is just not that high to put up there. Neither is Google at 200. Now, Google is the cheapest out of the Mac 7 because of the decline, but it's not worth 200 in my opinion. So if they just stay at these levels and you have everything else go up, I think that's really bullish, dude. And I for one, don't want to see the Mac 7 compound that aggressively. I think that's just going to lead to another chance for them to fall off as aggressive. And that's not that exciting to see. Now, Nvidia is the outlier because Nvidia is growing better than all those guys. And I think Nvidia can crush earnings, and, 145 is very possible, but I don't even think Nvidia should be, 170 after earnings or 160, like some of the Uber bulls say, because I just don't think that's going to be sustainable. You're just not going to have enough people willing to buy the stock at those levels. Google at 200 would still be cheaper than Microsoft at 400. Exactly. Dude, Microsoft at 460 in July made no sense. But so did Apple at 235. Made no sense, dude. The iPhone upgrade cycle isn't even here yet. And the market was willing to give such a massive premium to Apple. So I thought, it's funny because in hindsight, it's easy to say this, but now looking back at valuations in July, they were obviously stretched. And it was good that we got a drawdown. It's just that they're such good companies. They didn't need to go down 30%. They needed to go down, maybe 15%. And now they're still down a little bit from those highs, about 10%, which I think is really normal. And I think this is where they should trade until we get better earnings growth into Q3. But them running up before Q3 to these crazy levels they were at before, I just don't think that's worth it. And that's not going to help small caps. Small caps need liquidity and they need money coming from other areas. And it's probably going to come from the Mag 7. As John says, we need a broader rally. Exactly. Now, we did have some other news over the weekend that has implications for social media. This was really sad news to see. was not happy seeing this news, but the Telegram founder, Pavel Durov, was arrested in France. Currently, he is sitting in a France jail. He is the CEO and founder of Telegram. Telegram, for those that don't know, is a messenger application. I think it's the second biggest one outside of WhatsApp. And essentially, he as soon as he landed in France, they arrested him because he's not complying with the country's censorship laws. Telegram has 950 million active users per month. I think WhatsApp has like 2.2 billion. So again, it's lower than WhatsApp, but it's still one of the biggest apps in the world. I'm sure a lot of you in the chat use Telegram. And they arrested him. So in its statement, Telegram said it abides by EU laws, including the Digital Services Act, with moderation that is within standards and constantly improving. It also argued that it's absurd to claim that a platform or its owner are responsible for abuse of that platform. And France basically didn't care. They put his ass in jail. So this is really sad to see. This is really tough. I think, as Dougie says in the chat, Elon should not visit the EU at all. Honestly, dude, if I was Elon Musk, I would be afraid to go to the European Union, because they've already said that Twitter is violating a ton of free speech laws, or a ton of hate speech laws, whatever you call it. And Elon is on the side of free speech. You've got the Telegram founder on the side of free speech. They're not obliging with a lot of these policy requests by the bigger European countries. So it is a little scary of a time, I'm not going to lie, dude. Because, the logical conclusion is that in 2030, you get arrested in France because you liked a meme that the government doesn't agree with. So I'm not a fan of it. You guys know how I feel about capitalism, communism, censorship. I'm on the side of free speech always. And it is tough to see that happening. But that's just another argument about how geopolitically divided we are and what's going to happen as different administrations end up winning and what laws they put out around social media. Roku right here, 69.59. Altria Group at 53. That's up 1% on the day. Meta down a little bit right here at 1.71%. But it is going to be really interesting to see how this plays out. It's also going to be interesting to see if he gets out of jail as well. And I mean, like if France continues to say that he's violating their free speech laws, S&P just about to go negative. There you go. Just went red on the day. Implications on social media companies. I don't think it's going to have that many implications. I think Meta at the end of the day has been pretty compliant with most companies. That's why, or countries. That's why a lot of people don't like Meta. Twitter is less compliant. It probably will affect Twitter's revenue to an extent, but Elon has showed he doesn't really care that much about that. So Elon's going to keep doing Elon at the end of the day. I am curious what it does for Telegram. I am really curious what it does for Telegram's growth, and also if Telegram is able to get that guy out of jail as well. Because at the end of the day, if you censor a platform like that, it's just a little bit too much power in the context of the government, I think. Now, Telegram has been used for a lot of malicious things, but like that's everything, right? there's a lot of scammers on, there's probably YouTube comments, people impersonating me saying, hey, text me on my Telegram for like trading advice. All of that is a scam and it sucks. But like, I wouldn't blame the platform for that. I would just blame people. And like, should the platform be aggressively trying to stop that? Yes. But I don't think the platform can engage in full-on censorship, right? That's why YouTube doesn't censor a ton of comments at the end of the day, even though they know they're scams, because it's really hard to impose all that stuff. So it's really just a question of how you feel philosophically about it versus how you feel about how government should treat it. Starbucks right here up 1.4%. So Starbucks getting a bid at $95. Not bad on Starbucks. The home builders are doing really good. I was looking at the home builders over the week. Lennar is up at 185. You've got NVR continues to gain momentum. The home builders, the reason they're doing well is because it does look like we are in demand for way more homes, and they need to build way more than obviously the United States has right now. We have a massive shortage, which is why housing prices are up from 350,000 to 430,000. And you would imagine that the home builder is going to catch a bid. I mean, Lennar is up 45% year to date, dude, even though we are having a housing crisis. So the home builders seem like it's bullish to bet on them. And because rate cuts are going to come down, that means people are going to likely engage in the buying of homes at a higher level. Mortgage rates are going to start to come down, hopefully below 6%. Right now, I think they're at like 6.2. And that means you're going to have more demand for home builders. So that hopefully should be bullish for Lowe's and Home Depot as well. Lowe's up a little bit right now at 1%, and Home Depot up about 0.57%. But I do think the home builders are going to catch a bid going into 2025 as we have rate cuts begin to come down. Nvda is now falling 127, down about 2% on the day. This is not that surprising. Nvidia going into earnings, you're going to expect some volatility. It's up from $90. I don't think it's going to go to 140 before earnings, but after earnings on Wednesday is going to determine pretty much everything when it comes to Nvidia. Chris says, I was on Telegram for years. I've not gotten one spam. I deleted WhatsApp after Facebook bought it. Interesting. I don't use Telegram. I know a lot of people do. I've never personally used it. But dude, if they have 1 billion people every month using it, it's hard to justify arresting the CEO and putting him in jail for, policies that he's imposed on the app. But we'll see. Hopefully he gets out of jail soon, and we'll see how that story ends up playing out over the next couple of weeks. Rates are going down. It's great for builders. Lower weighted average cost of capital, more demand. 100% agree. I think regionals catch a bid. I think home builders catch a bid. I think small caps catch a bid. There's a lot of companies that I think SoFi should catch a bid. SoFi up 3.1% on the day. A lot of these companies should catch the bid. Again, the big caveat here is about unemployment. If unemployment etches up, none of the rate cuts are going to be bullish because the market's going to be pricing in a recession. If unemployment stays stable, the rate cuts are bullish. Like literally to me, it's that one metric now. Even earnings growth can't decisively get you to a bull run, because if unemployment goes higher, the market's going to be like, okay, well, Meta grew XYZ this quarter, but next quarter, they're definitely not going to grow as much as they're growing right now because unemployment's going higher, which means people are going to stop spending less money. Advertisers are going to pull back, yada, yada. Like the market's going to price all of that in. So as long as unemployment stays stable, I think we're going to be good. But if it doesn't, that's where we get a little bit more pain in regards to what will happen with rate cuts. But if so, everything's catching a bid, dude. Regionals, home builders, I think all those guys are catching a bid. Redfin is up like 40% in the past week, dude. Look at that, up 1.9% of the day over the past 5 days. Redfin was at, let's look at the past month. Redfin was at $6 August 5th. Today it's at almost 12. So pretty much a double in the past 3 weeks, based on home builders catching a bid. HIMS is down 3.2%. I don't know why. HIMS is really interesting, dude. It's up a lot year to date, but it could not maintain that $24 valuation level. There's just like too much bad news that came after it, whether it was the FTC lawsuit or GLP stuff. But I think HIMS is one of the most solid growth stocks on the market. And at a $3.5 billion market cap, growing 60% year over year and profitable. I mean, I don't think it's a horrible situation to DCA into. And maybe there's some better opportunities you can get, but not really sure why the market keeps taking HIMS down. It just hasn't been able to get that same level that it was at back at the beginning of July. Thoughts on Opendoor? I think Opendoor should catch a bid. It's up 4% on the day. It's catching a bid because the home builders are catching a bid. The problem is I just hate the business. Like the buying and selling of homes, I think is a flawed business model. I think the management is incompetent in this company. This was a SPAC that was never supposed to go public, but they ended up going public and they just really did not live up to the hype. And I think there's probably some level of momentum that you can get from it when you have rate cuts, but it wouldn't be the real estate company I would bet on, just because I just don't believe in the overall business. I don't believe they can time the pricing of their buying and selling. They've already proven they can't do it. That's why they're down from $35 to $2. At one point, they were 70 cents in December 2022. So not a fan of the company, not a fan of management, but will it catch a bid when we get rate cuts? Probably. Amit, did you see PDD? They were down 28%. They own Temu. Yep, we looked at that. Not touching PDD. Temu, not really the most attractive asset. And it looks like the Chinese consumer is struggling a little bit, which is why they're down 28%. Catch a bid is the phrase of the day. Am I using that phrase too much? Guys, this is what it's like to be a content creator. You find new phrases and then you exploit them as much as you can. I haven't said "hey" in the needle stack in a while. It just hasn't come up recently, but now you guys reminded me I should be using that phrase a little bit more as well. Thoughts on Grab? That's like the Uber of China, right? Is that public? That's public. That's the Uber of China, right? If I'm not wrong. The problem is China, dude. Like that's like it's constantly the problem. It's China. Oh no, it's not China. Is it India or Singapore? It's not China, right? It's Singapore. Okay, so then I'll look at it. I've heard of this name. I don't have a lot of financial thoughts on it because I haven't gone through it. $12.8 billion market cap, price of sales of 5. 3.96 billion shares outstanding. Why does this company have 4 billion shares outstanding? Did they do a reverse split or something, like, or a forward split? Stock was at 18 in 2021. Now it's at 3.2. Singapore company. We got my uncle in the chat who says it's big in Singapore and Malaysia. So yeah, that's why I recognize the name. Okay, so I'll look at it. If it's not China, I'll look at it, dude. And I'm not trying to be too ideological against China. I just really, if it's a Chinese name, there's a massive overhang that gets that takes away any of the time you do research, because you have to deal with the fact that it's the CCP controlling it at the end of the day. Grab Holdings, interesting. I don't even know we could buy this here. Singapore. Grab, how much is it up year to date? Year to date, it's down 3%. Over the past year, it's down 12%. 5 years down 72%. They went public in 2020. This looks like another SPAC that went bad. This looks like another SPAC that went bad. Interesting. If anyone has any DD on it, let me know. DM me on Twitter. I have not looked at it, but given it's down 72%, maybe there's an opportunity. I just don't understand why the hell they have 4 billion shares outstanding. That's kind of insane, in my opinion, dude. That means you need so much volume to get the thing moving. I mean, 4 billion is kind of, I mean, Palantir is 2 billion. That's kind of ridiculous. SoFi at 771, Palantir 3113, S&P now red on the day, 561.85 right now. Singapore is China with more money and better common sense. Well, the thing about Singapore that's so interesting, dude, is like they are so uptight about like ownership. Like a car in Singapore costs $100,000. Like they are very sophisticated about maintaining their culture in Singapore, and they don't want to mess up like the flow of traffic, and like they want to make it hard for people to like not, you know, be on bikes and cars and stuff, or be on walking in on, you know, your regular legs. So it's very interesting how Singapore operates. Even alcohol, if I'm not wrong, alcohol is super expensive in Singapore. Like there's very unique cultural things in Singapore. I've never thought of investing in Singapore as like a growth opportunity. The only two growth opportunities I like really are Argentina and India. That's it. Argentina with Malay is opening up free markets, and India as a couple billion people that are ready to get online. So those two are attractive to me. Everywhere else, like Europe is not attractive. Asia outside of India is not that attractive. China is definitely not attractive. There's some African countries that are a bit more attractive, like Kenya. That's a bit attractive. They have some new reforms coming in place. Nvda 127. But Singapore and Malaysia has not been the most interesting to look at. Spencer says, yeah, they want nice cities. Imagine that. Well, nice cities comes at a price, right? And that price might end up being that it's very expensive to own basic things that we own in America there. Granted, the country is smaller, so I understand that. Mexico is also an opportunity. Mexico warehouses have actually caught a major bid. I'm forgetting the ticker. But if you look up Mexico warehousing companies, they are getting a lot of momentum because we're importing a bit more from Mexico than we are from China in certain sectors, not overall, but in certain sectors. And this started happening July of 2023. So Mexico is also a country that's getting a bit more momentum. SoFi 772, Robnet at 2092, IWM 221, Open Door 235, and then HIMS right here at 1614 on the day. Amid spoken like a true American, only America for the win. It's not only America for the win. It's just like, dude, there's a reason America has, 7 companies in America are more important and have a higher market capitalization than most countries. It's because American dynamism and American tech companies, they win, dude. Like they win. Like there's not that many interesting tech companies around the world besides the ones that are made in America. There's just not. And they're the ones that create all the value. This is what we talked about last night. It's like to help yourself to be sheltered from AI potentially replacing jobs in a doomsday scenario. The easiest way is to own tech, because if all the value is going to go to tech, if all the value goes to Tesla when humanoid robotics replace millions of people, then you own Tesla, right? And in America, it's easier to kind of see the progress of that happening more than everything else. It's damn expensive in Singapore. Yeah, that's what I've heard. I mean, I talked to a Singapore, shout out to Jimmy if he's watching this, one of my friends from Singapore a couple of years ago, and he was telling me he has a business in Singapore. It's essentially like Uber for laundry, and he's my age, and the business is doing well, is making a couple million in revenue, and he's just like, dude, even with the money I'm making, living in Singapore is crazy. Like the expenses are just ridiculous in Singapore. So definitely a sort of different environment than the United States. Like in America, it's expensive to live here, but you can go to like Alabama and it's less expensive. You know, if you go to New York, it's expensive. If you go to New Jersey, it's expensive. California is expensive. Chicago's expensive. But if you go to like Tennessee, yeah, it's not as expensive. You know, you can choose to migrate to places where you have like Arkansas, not that expensive either, in a decent situation. Where's Tesla right now? Is Tesla falling off? Tesla wow, why is Tesla down 3%? Maybe it's just the broader market falling off. Maybe it's just the broader market falling off. Cash King says, I don't want to live in a country where marijuana is illegal. Gotta love America for dispensaries. Yeah, that's another thing, dude. Like, I think Singapore is also very anti-drug, if I'm not wrong. If you get caught with weed, yeah, cannabis is currently illegal in Singapore. You could get a maximum of 10 years in prison if you're caught with marijuana in Singapore. I mean, look, I know people are 50-50 on this. I personally think marijuana should not be illegal anywhere, dude. Like, I don't think the drug is like heroin or anything like that. And getting 10 years for having weed on you is insane. And I think all these countries can make a crap ton of money off it. Now, the downside is like, oh, well, what if our population starts getting high all the time and they become unproductive? And like, yeah, that's a downstream effect. But if you're super ambitious, weed is not going to stop you from being super ambitious. Like, A, you're just not going to smoke. B, if you do smoke, you're still going to be super ambitious, right? I think recreationally and from a medicinal purposes, you can make massive tax revenues from selling marijuana. And I think the studies have obviously shown it's not like heroin. It's not cocaine. So that is weird that it's banned in a lot of different places in Asia as well. You will get a death sentence in Singapore if you have more than 15 grams of heroin. See, that's insane, dude. Like, that's crazy, bro. I'm not a fan of heroin. I don't think we should be putting people to death for having it. Like, that is a little bit too much. Kava's up. Is Kava still catching a bid? Wow, dude. Kava's up 4%. Holy crap. Kava is now up year to date 211%. Holy shit, dude. This is outperformed. This has outperformed every stock in the stock market. I think the only one that's done better is SMCI. Nope. SMCI is only up 100%. It was up 200% in March. Wow. Kava, 211%, folks. Kava has caught all the bids this year. Goodness gracious, bro. 210%. Not Nvda, not Microsoft, not Palantir. It's Kava. This kind of feels like a bubble, dude, on Kava. The only reason I say that is because now, I mean, I haven't dove deep into their valuation, but it kind of feels like people are just piling in to pile in. And, but granted, that's what happened with Chipotle for a long time, and Chipotle got a lot of momentum on it. I just don't know if a restaurant chain deserves this much of a premium. What's the price to sales on Kava? Price to sales is, price to book is 24. I don't see the price to sale. Are they even profitable? No, they are profitable. Price to sales is 17. You're paying a 17 price to sales on a restaurant. It is growing 32%. So I guess the growth somewhat just, I don't know. PE ratio is 740. That'll probably decline over the next coming years. Hey man, I guess it's Kava. I guess money is poiling into Kava. Well, that's a good thing though. You want to see companies like Kava get some momentum outside of the big tech names and see the market, start to diversify a little bit. IWM at 222. Where's Abercrombie? They have earnings this week as well. They're down 1.35%. They're up 300% or 238% over the past year. Year to date, they're up 86%. For them, operating margins were up 700%. If they continue to expand operating margins, they're going to do well. Target had apparel sales go up last quarter, which was amazing because you wouldn't expect people that are struggling to buy clothes, but they are. So if people are buying clothes, you would imagine that maybe the consumer is also buying Abercrombie because they sell clothes. And if that's the case, hopefully that's good for their earnings. But we're going to have to see when they report their numbers as well. Same thing with Lululemon. I kind of shitted on them last night. This stock is down 50% year to date. I don't think Lululemon is going to have a great earnings because I don't think the consumer is going to be excited to buy $200 sweaters if they're struggling. However, if Lululemon is marketing to a consumer base that doesn't really care about spending $200 because they have enough disposable income to do that. Given it's down 50% year to date, maybe Lululemon catches a bid. But I think the odds are against it just because I think the consumer's struggling a little bit more than last quarter. And I don't know if they're buying, $200 sweaters. But we'll see. We'll see what happens with Lululemon right after Nvda. What do you think of Crowdstrike earnings this week? So I talked about this last night. I think Crowdstrike is going to lower guidance slightly, but I don't think the street is going to tank it. So a couple of weeks ago, I thought Crowdstrike would have horrible guidance and the stock would go down 10% on earnings. Now I think max pain is like 5%. And I think it's 5% because at the end of the day, they're still a leader in endpoint security, and the TAM for cybersecurity is growing dramatically. And you can't really go wrong betting on them, Fortinet, Centennial, and Palo Alto. So I think they're still going to be a top player. The recovery they've had over the past couple of weeks probably shows that the market is willing to overlook it. Maybe they drop a little bit, but I don't see a 10 to 20% decline on declining their guidance. I think they end up saying, yeah, we're taking a guidance hit, but we're overall going to be okay. And their Q2 numbers are still going to be over 30% ARR growth, which is great because this whole thing happened after Q2. And so that momentum probably shouldn't mess up their quarter's earnings. SoFi 773 up 2.74%. Not bad. SoFi again continuing to maintain that momentum. Who else wins in the cybersecurity race? Palo Alto. Yeah, I think Hack is the ETF people should look at. I found that out over the weekend. If you just want to go long cybersecurity, Hack, it's up 13% year to date. You have a little bit of a discount on it since CrowdStrike fell 40%. But Hack and CIBR, those are two cybersecurity ETFs that potentially could be maybe as big as SMH over the next 10 years if cybersecurity ends up growing the way that semiconductors ended up growing in the past 2 years. So those are ones that we'll look at. Bug is another one. Yeah, BUG. Bug is another one. Morgan Stanley said they're not going to make any changes as a result of that. So it's pretty much saying business as usual. Yeah, I agree. I mean, Morgan Stanley, Goldman Sachs, they all came out and they said, hey, we don't think there's going to be any issues with CrowdStrike. And I don't think they're going to have to pay Delta $5 billion. Like some of the headlines, dude, when CrowdStrike, like it was just so stupid. People were like, oh, they're going to have to pay $5 billion. It's like, no, they're not, dude. Like a lot of this stuff Delta could have resolved, but Delta chose not to. Like there's so much nuance to it. CrowdStrike is at the end of the day, one of the most important cybersecurity companies on the planet. And most people are not going to leave them just because of this mistake, especially if their mistake was resolved within a couple of days for most of their clients. So they'll get a rebate, they'll get some discounts, but they're not going to leave the company in general. Rocket Lab is down 5%. So Rocket Lab getting hit today, down 5.6%. Snowflake getting a bid, up 3.2%. AMD at 150. AMD just went red, down 3%. And that's probably because Nvda just fell. Nvda now down 2.6%. So semis have taken a little bit of a breather. Google down about 0.4%. TSM down 1.4%. Again, I don't think this is bad news. I think this is just cooling off a little bit after a ferocious 3 weeks in the market. And then IWM still maintaining its momentum at 222, up about 70 bips on the day. Where's Intel? Intel's getting hit as well. Intel, wow, down another 2%. Intel, I guess for wheeling, it's in a range. So I guess wheeling Intel is not horrible right now. I haven't checked the premiums on it, but really not seeing that much momentum to the upside or downside. Spotify is the only EU company that you know. Honestly, same, dude. I don't know a lot of European tech companies besides Spotify. And that's not just because I'm ignorant around Europe. That's because not a lot of them have made a name for themselves that's so universal that everyone would recognize those companies, you know? So I think that I know a couple of defense startups like Hess in Europe. I think they got funded by like $200 million and they're worth a couple billion. But outside of that, like, there's just not that much talent, or there's a lot of talent, but there's just not that much talent being unlocked in other parts of the world outside of America. The place that needs the most tech companies is Japan. Japan needs them because Japan's GDP to debt ratio is disgusting. And that's where you need to unlock innovation. The problem is they have population growth. And so it's tough to unlock innovation there. And they've had interest rates low for a long time, but they still haven't been able to really unlock massive momentum. ASML, yeah, that's another one. ASML in the Netherlands. So ASML is a good one along with Spotify. ARM is a UK company. Yeah, well, I guess ARM. You could put ARM up there. So ARM, ASML, and Spotify. I guess those are the three kind of big. SAP, yeah, I was going to say SAP as well. SAP is another one. SAP just feels like it's such a legacy company. It feels like Feels like Palantir is going to fucking compete with SAP aggressively one day. Like, I don't like what major innovation has happened from SAP in the past 10 years. I don't know. And I know it's crazy to say Palantir is going to come for the lunch one day, but I don't know, dude. I think a lot of legacy SaaS companies, they're going to eventually have a reckoning over the next 10 years. What else do we have? Altria Group up about 1%, Bitcoin 63, NASDAQ down about 1.12, Spotify down 2.25. Spotify's had a great year. I mean, if you got Spotify at the bottoms, I was pretty bearish on Spotify at the bottoms, and I was wrong about that because I didn't see Spotify's user growth outpacing their profitability, but they ended up proving that they could do it. And that was really important for them because once they got profitable and then you had the user growth surging, it was just inevitable that the market was going to give them some. But that's how the Spotify story played out. And so if you were in Spotify over the past year, I mean, look at that, 140 to 350, 87 in 2022. Spotify story played out pretty well. SMCI is getting smoked. Where's SMCI? Wow, down 7%. All of this is the pre-NVIDIA dump. Remember, this happened in February and in May. I remember this happened explicitly because I had a ton of call options on Robinhood in my Roth IRA. And this is right before NVIDIA reported. I was up like 50% on those call options. This is when Robinhood was like $13. I bought them at $10, so I was up nicely. And I sold them for like $5,000 because I was like, well, NVIDIA's tanking, so the market's going to tank, like just like a dumbass. I was like, well, NVIDIA's tanking. I gotta raise cash. NVIDIA ended up just blowing away earnings. NVIDIA goes to $900 like in the next 2 weeks. Those call options would have been up like 300%, not 50%. And I would have made a lot more money. So I do think that the pre-earnings dump to NVIDIA happens every single time and all the semis are affected. And if you raise cash because you feel like NVIDIA is going to tank the market, it's not a horrible strategy, but you might be leaving money on the table if NVIDIA crushes and then the broader market goes up. And again, I left like $50,000 on the table. Like, because we saw what happened with Robinhood, dude. It went up to $20. Like, I literally left $50,000 on the table for $5,000 because I thought NVIDIA would crash the markets. So that was not fun. But this tends to happen before NVIDIA. So I expect this is the regular pre-earnings dump. And then hopefully NVIDIA crushes it. And if NVIDIA crushes it, markets recover and they go back to normal. But Jensen's got to deliver the goods. Jensen has got to deliver the goods. Chris says, I agree, Amit, but what if NVIDIA does super well and still drops and everything along with it buy now or later? I mean, if NVIDIA does super well and everything drops, then the market just doesn't care anymore about NVIDIA's earnings growth. Or it's a short-term kind of drop and the market's like just kind of feeling out where things are going. I mean, look, I don't expect NVIDIA to do well and the markets to drop because there's so much momentum relying on NVIDIA in terms of liquidity and capital and call options that you would imagine there's a move to the upside and that carries the market. Now, if the market ends up tanking after NVIDIA does well, I think there's a piece of macro data that messes up everything. And that macro data is probably related to unemployment. That's the only way I see the market tanking after NVIDIA crushes. Because then the market will be like, well, if unemployment is going bad, then NVIDIA crushing doesn't matter because the street's still going to, earnings growth is still going to decline because people are losing their jobs. Absent that, I think an NVIDIA crush means the market goes up. We've seen the story too many times, dude. The week of NVIDIA earnings in May and February, the market tanks. And then boom, NVIDIA crushes and the market's fine. So I think it's really going to be based on, what ends up happening from the macro data in conjunction with NVIDIA. Tesla right here at 211. Tesla getting smoked down 3.8%. NVIDIA down 3.6%. Again, I think it's kind of healthy going into NVIDIA earnings. It's better to have NVIDIA at 120 before earnings versus at 140. I think objectively that just makes the expectations a little bit easier to beat. Robinhood at 20.85, Palantir at 30.84. Now the entire market, outside of SoFi, the entire market is going red. And I like SoFi showing a lot of strength right here. Even though usually if the market turns, SoFi turns with it, but SoFi is really going contrarian against the market. S&P now at 560, down about 1/3% on the day. All right, let's get an update on what we think could happen from the Fed in September going into rate cuts, and then we'll keep going from there.
Averages coming off back-to-back positive weeks. So, of course, that was helped by Friday's rally on Fed Chair Powell's comments signaling rate cuts ahead. For more on the markets, we're joined by John Mackay, U.S. Head of Wealth at Schroders. John, good to see you here.
Good to see you.
Markets seem to feel as if maybe, we've kind of nailed this thing, that there isn't really a serious trade-off to be worried about at this point in terms of where rates go relative to the economy, relative to earnings, relative to stocks. Where do you fit within all of that?
I'm a little concerned. I hate to be a Debbie Downer, but I'm a little concerned about the rally we've seen over the last 3 weeks. It's almost like the market thinks the Fed knows exactly how many cuts they're going to do, and I'd be, willing to bet that Powell and the other Fed members don't know. Right? The Fed is uncertain. Powell said rate cuts are coming, but he didn't elaborate on that. He didn't say we're getting 50 in September or 25, and he certainly didn't elaborate on the pace of rate cuts. And as we've seen in the past, the Fed puts out the summary of economic projections, the set, which shows the consensus view of where Fed fund rates are going. They usually get it wrong. And so I think there's a lot more certainty priced into the market than what we'll get out of the Fed in September.
Although there is a school of thought that says without knowing or even pretending to know exactly how far or fast rates might go down, the Fed has a couple of 100 basis points of what it believes to be excess restrictiveness in their policy. And therefore, the direction is that's a cushion if things perhaps don't go right with the economy.
I would agree with that. But I think, again, getting back to the market's pricing in roughly 100 bips between now and the end of the year. We've got 3 meetings. So that implies you get 1 meeting where there's 50 bips. And I think the problem is, what if we get a good labor report for August in early September? I think that throws the market's pricing off a little bit. And so, again, it gets back to a little bit too much optimism, probably priced in the market right now. Valuations are high heading into this cutting cycle to begin with. There's a lot of crowding in the market. And so I think you could get a little bit more volatility between now and the Fed meeting in September.
Where does that take you in terms of, wanting to, lean in your portfolios? I mean, if you think that things are crowded in terms of certain assumptions, where else would you go?
Super boring. Boring is beautiful. Look, the Fed's cutting rates because the labor market is weakening, right? Powell said as much.
Well, they would say they're cutting rates because inflation is on the way to target.
But he also said that he doesn't want to see.
That's not the reason they're cutting rates. They are cutting rates because the labor market is weakening.
Any more deterioration in the labor market. So it's sort of shifting focus from inflation, a focus on inflation, to a focus on the labor market. So if we do get better than expected employment numbers, I think it will still allow the Fed to cut rates, but maybe not at the pace the market was expecting. And so again, getting back to areas of the market that aren't crowded, aren't overly priced, consumer staples, we all need soap, shampoo, and toothpaste. Pretty boring stuff, but those are areas of the market that have done well. If you look back at when the inflation report came out in July, on July 10th, that was sort of a clear signal to the market the Fed could start cutting rates. Consumer staples, utilities, REITs have all done better than infotech, communications, and some of the more crowded areas of the market. And so I think it's just worth looking at your portfolio and saying, do I have enough, right? Do I have an umbrella in case there's more market volatility and more storms coming?
Mm-hmm.
So
I think that's fair. And again, I'm going to be, really digging deep into unemployment data. I have a lot of more sort of pieces of research and charts that I'm looking at that I'm going to present over the next couple of weeks. But my biggest focus now is unemployment. If it stays stable, we're good. If it doesn't, we're in a little bit of a tough situation. So I think, and my take is that it's going to be stable. And if that's the case, I think any dip is a dip you buy because the broader market will do well by the end of the year. And then obviously NVIDIA's just got to crush it. Small caps are up right now. They're kind of the only thing that's up right now. NVIDIA taking a breather, everything taking a breather right now, which is fair. We'll see if small caps survive today. If small caps go red, then the entire market goes red. If they stay up, contrary to the rest of the market, I think that's pretty bullish for a little bit of sector rotation, which is not bad. And we'll see if they can continue to maintain momentum towards the rest of the day. All right, so that's it for me. Again, for those that are afraid that we're going down today, we've had 3 weeks of just green. We've come from the lows of August 5th all the way to basically all-time highs. I think we have to just chill out a little bit. This is one of those days where you just relax and realize that people are going to take profits, and that's okay. And that's healthy. You kind of don't want the market at 570 before Nvidia earnings, because that would definitely not be bullish, because there's like nowhere to go but down at that point, right? You need some room to continue to gain momentum. 2 final things we'll do, and then I'll be done for today, guys. I have a meeting at 11 a.m., kind of an important meeting. I'll let you guys know how that meeting goes over the coming weeks, but you got to get into that meeting. One thing I saw, this chart was really interesting here today. So the cost of training 1 million tokens has dropped, or outputting 1 million tokens on GPT-4 from $180 in 2023 to 75 cents. It is 240x cheaper to input and output 1 million tokens, which is the sort of metric you calculate when you type in a query in ChatGPT and it comes out with a response. So this is incredible. And it just shows you the rate of how AI is expanding. And it goes to show you how much easier it's going to be to train future models, and then how those models are ultimately going to impact our lives as they're in all of the consumer devices that we use and the consumer products that we use, and obviously into the enterprise. So I think it's going to get a lot cheaper to export a lot of these tokens, which is going to be a lot more efficient for a lot of the companies that are deploying AI at the end of the day. So that's important. And then finally, word of the day is disingenuous.
Disingenuous.
Lacking in frankness, candor, or sincerity. I think our boy Jensen is going to have to not be disingenuous on this call. He's going to have to really tell us again the same thing that we've constantly heard every 3 months by him, that AI is real. It's not going anywhere. It's going to be alive. It's going to keep growing. Sometimes we just need Jensen to be our therapist for the market again this time, and have him say everything we want to hear, which is that AI is real and the market is going to expand dramatically as the TAM for AI grows. And if he can say that, I think the market cools down a little bit, along with if he crushes numbers, and we're going to have, hopefully, a broader rally off of that Nvda earnings, if he's not disingenuous, which I don't think he will be. I think Jensen is one of the best CEOs on the planet, and I think he's going to be able to pull off a pretty decent earnings. So Wednesday, that's going to be the most important thing. August 28th, we'll see what he ends up pulling out and what he says, and we'll keep going from there. All right, so that's it for me. 3:45 p.m. I'll be back on the market close. We don't have any big earnings today, but we'll take a look at some more data and look at some other stuff. But no big earnings today. We have a couple of earnings tomorrow after the bell, some cybersecurity earnings, and then on the 28th, Nvda, Salesforce, and Crowdstrike, all after hours, which is going to be crazy. And I don't think anyone's going to care about Salesforce and Crowdstrike because we have Nvda. But those three are going to be what we have after the bell on Wednesday. All right, that's it for me. Thank you, everybody. Monday, let's crush it. I'll see you guys back at 3:45 p.m. for the market close. Bye, everyone. Have a good one.